7th floor.
We'll see you around the timeline. Feels good to be back.
I think the Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here on the zkSync from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
Welcome to the nest. See you on the show.
Yes, sir. Happy Wednesday, June 17th. You're watching the Rollup. It's Privacy Day on the Rollup. live from the tokenization tower here in the financial capital of the world. We've got an amazing show for you today. Today is Wednesday, June 17th, Privacy Day. It is the day of the Fed meeting. There's a lot going on. Ladies and gentlemen, if you're watching on the Zama account, if you're watching on the Near account, welcome to the Rollup. We're live here in the Empire State Building, powered by our friends at Plume, on-chain infrastructure for asset management and more. We've got a full slate of guests today. Tushar, Joachim, Eric, Rand, Omar, and plenty others.
Yeah.
Guys, your first time watching the show, welcome to the show. We do the show live every day. Great to have you guys here.
Incredible
We've got our
lineup.
first guest, Tushar from Multicoin, ready to join us. We're going to get straight into the guests. We'll have some time in between to chat and do some things, guys. But we got a ton of guests. We got a ton of privacy thesis conversations is coming out. Rob, war's over, deals being signed. How we feeling?
I'm feeling great. I am excited. I am ready to get into our first guest. Like you said, incredible show today, Privacy Day, presented by Zama. So we've got Tushar from Multicoin, who's going to join us in just a bit. We've got Joachim from T-Rex. They're doing billions. We've got Canton. We've got Zama. We've got zkSync, Venice, Nillion. I think it's really the best of the best in the privacy game. So we're going to be talking all the way from the asset layer to the agentic layer to the confidentiality layer. And shout out Zama, amazing announcement today about earning yield on confidential deposits. I think
on Morpho.
People just haven't really thought about how deep this privacy structure goes. And so I'm excited to talk to Rand about it today.
I agree, and I think this confidential future for on-chain DeFi, for institutions, for everyday people is going to be massive.
Absolutely.
And who better to start the show than Tushar Jain, the co-founder of Multicoin. First time on the show. Let's bring him up. Let's get this show started. Tushar, we're live, Empire State Building. It's 75 degrees. The Knicks just won the NBA Finals. World Cup's on. I mean, come on, man. How we feeling?
Life is good. Feeling great. Glad to be here.
Good, man. Good, man.
Absolutely. We're happy to have you here. I think it's our first time chatting, first time having you on the show. And so, obviously Multicoin is a household name at this point. You guys launched in 2017 with Kyle Samani. And you personally have been in the game a long, long time. Because it's your first time on the show, Tushar, maybe you could just quickly, describe a little bit about how you got into the space, how you found Multicoin, and why we have you here today chatting about privacy in this space.
And the thesis.
Yeah, absolutely. So, I'm founder and managing partner at Multicoin, and my background is in finance and political science, but I've always been captivated by the intersection of technology and finance, and crypto sits exactly at that intersection. And I'm lucky that it exists because I couldn't imagine spending my life working on anything else, really. I first got interested in crypto when I saw Ethereum in 2016, and it felt like seeing a glimpse of the future. Everything about fully on-chain, censorship-resistant, programmable smart contracts just made sense. It felt to me that this was the future to have internet capital markets rather than the type of capital markets we have now, which are more like printing press-based capital markets. A lot of the fundamental underlying technology that our financial system works on today is from the industrial era as opposed to the internet era. Ethereum felt like the beginning of a new economic paradigm, and that's what convinced me to put everything I had into starting Multicoin. We're one of the first crypto-focused investment firms. We've been thesis-driven since day one. We started with just a few 100,000 AUM. Today, we're 17 people and manage well north of $1 billion across our various funds. And something that we pride ourselves on is trying to find the non-consensus view that in a few years is going to feel really obvious. And that's why I'm excited to come here and talk about privacy.
Yeah. Love it. Love it. I love the hyperliquid purchases, much lower, sir. Welcome to the train. Glad to have you on. And you were, I think I saw you on Bankless a couple weeks back talking about Zcash with Mert. Obviously there was this crazy, Opus 4.8 white hat vulnerability found. Zcash now kind of came out of the ruins a bit with Anthropic's team putting Mythos to the test on Zcash blockchain and effectively verifying that, this is effectively safe, for lack of a better term. And I feel that Zcash itself has kind of revived a lot of the core ethos of privacy as a store of value specifically, and a lot of the kind of core of the ethos. And in this kind of bearish time, I think what pulls us out of this bearish time is this kind of return to fundamentals. That's at least what I call it. So I'm just curious, Tushar, privacy as a store of value. How do you think about private assets as it pertains to them being store of values? And kind of like, what is the privacy as a store of value framework that you guys have at Multicoin or you personally?
Yeah, so let's talk about Zcash there. And let me start out by talking about the privacy store of value thesis. And I'll talk about my journey along that thesis, because I used to be a bear. You can probably go find up some old tweets of mine that were bearish on private store of value. So I want to talk about what changed. I think the core thesis for Zcash is it's a return to crypto's roots. It's a return to the cypherpunk ideals that crypto was founded on. Bitcoin is censorship resistant and no one can freeze your Bitcoin or stop you from using it. But that does not stop the state from seizing your known holdings through so-called wealth taxes or unrealized gains taxes or, whatever name they're going to put on it. And that, the whole industry and, Bitcoin initially was founded on this rebellion against the system that was being controlled and manipulated in order to empower a certain set of people. And now it feels like a lot of crypto has gotten co-opted by the system. It's now melded into the system. So I think Zcash is a return to those cypherpunk roots that are all about liberty and individual freedoms that seem to have, at least culturally, moved away from assets like Bitcoin. That's, I think, the crux of the Zcash thesis. There's a few other pieces, such as the quantum resistance, which I think is very important, and the ability to actually implement scalability, which I think is important. But the core of my thesis is actually a cultural cypherpunk thesis more than something else. And I think that's what makes something a store of value. People have to believe in it because of their personal views, their opinions. They need to have some basis for it that is not going to be easy to change or to shake people out of. And if it's not a deeply held conviction, then I don't think it can be a store of value. So now let me talk a little bit about how my view on privacy has evolved. I used to think that privacy only mattered for payments, not for store of value. And payments will be in stables. So I thought, private stable coins will be the solution. And to be clear, I still think privacy matters for payments and for trading. That's pretty obvious. You don't want your entire financial history to be visible on chain to anyone you ever transact with. You don't want your trades to be visible for other people to go and front run. You don't want your liquidation prices to be visible for people to go hunt those levels and liquidate you out of a position. So I think that is important. But now I think privacy also matters for store of value due to wealth taxes, right? I think we are going to see increased economic inequality due to AI. And that is going to lead to a bigger political movement for wealth seizure. And I believe that people are going to look to protect themselves from that. And Bitcoin will not protect them because those balances are all visible and public. So I think at a very high level, the private store of value thesis it just has a different backdrop, different fundamentals behind it. So while I was bearish before, now we have a substantial Zcash position in the fund, and I'm bullish on the future.
Yeah, and just to add something there that happened today is I believe it was the governor of Illinois created this rule that applies excessive taxation to very minuscule basic transactions of cryptocurrency, as well as applying, what is typically known as like a property tax in real estate, applying that to Illinois residents' ownership of crypto assets. And so you've got this already happening in the United States in a single state where a governor is coming out and saying, if you own Bitcoin, Ethereum, whatever, we're just going to tax you on the ownership of that asset. And so, you can put the mental pieces together in your mind as to how Zcash and private store of values can kind of play a role in someone's establishment as a sovereign individual.
Yeah, absolutely. That tax is absolutely ridiculous, in my opinion. Like, you move Bitcoin from one of your wallets to another wallet, and they want to take a cut of it. It's outrageous. And look, I think people have short memories, and they don't realize how quickly political winds can change. Everyone has this feeling, with the current Trump administration being friendly, and that gives a sense of safety. But you don't know what the future is going to hold politically. And at its core, crypto was a political movement. Like that, read the white paper. It starts out with Chancellor on the brink of second bailout for the banks. Like, this is a political movement at its core. And we have to recognize that and go back to our roots as an industry.
Yep. Absolutely. And you described how Bitcoin is moving further and further away from our roots and how it's becoming institutionalized. And this was pretty important for its store value thesis, at least its path dependency of one. And the ossification of it just kind of continued to solidify it into what it is today. And the institutions, kind of continue to rally around that rather than rallying around the original ethos of, kind of computer science and cypherpunk innovation. But that is kind of the gap now that Zcash is filling. And so we understand and tend to agree with the thesis that there are net new buyers of Zcash, and they're probably, disillusioned cypherpunk individuals that were part of Bitcoin and now are moving over to the rediscovering that thesis. I'm curious, and I really love the kind of bifurcation that you parse out between, fundamental privacy for a store value purpose and privacy elements to our monetary system. And I mean, this was kind of a big debate in the Bitcoin days as well. Do you have, big blocks so that you have Bitcoin Cash and you have, these things that you can use Bitcoin to buy a coffee? Or do you go the store value route? And obviously we know what happened with Bitcoin. Privacy can apply in both of these situations as well. Zcash taking the store value route. I'm curious who you see as the net new buyer or the net new user of each of these, because they have different answers for these two classifications of privacy. Kind of with the understanding that Bitcoiners are coming over to the Zcash private store value world. Who, after the Bitcoiners, do you think are the net new buyers of, the private store value, specifically Zcash? And then, maybe switching hats, going to the private, monetary system, right? Zama launched their confidential earning products on USDC and whatnot. I'm curious what do you think the adoption curve looks like in both of these classifications of privacy?
Yeah, absolutely. So for context, we're lead investors in Zama as well. We've invested in several other privacy initiatives across the ecosystem, so that this is a big theme for us. And one question I like to always ask myself is, fast forward 5 years and look back, and what's going to be obvious to you that today is not obvious? And it's so obvious to me that RWAs are coming on chain, right? You see that with Project Crypto from the SEC. You see that from all the big asset issuers, all the banks. Everyone wants to modernize that infrastructure. But I think it's ridiculous to think they're going to do that and broadcast all of their activity in real time to the public. That doesn't make any sense. Privacy is not optional if you're a large trader. It's not something you can risk leaking out there. People are very sensitive about information leakage. So what do you need? You need privacy protocols like Zama that then enable you to have the upgrade of the system that blockchains allow, but allow you to do so privately. So that's a broad category that I'm very excited about. This is the modernization of the financial plumbing that underlies our entire economy. And I think it's going to be absolutely transformational. We're going to hopefully see the Clarity Act pass here, in the next couple of months, which provides even more certainty for bringing these RWAs on chain. And then I think privacy will have its time to shine there. And now getting to the second part of your question on Zcash and private store of value, it's who do you think were the Bitcoin buyers, right? In the 2015 through 2020 era, right? I think it's that same kind of customer segments, right? It's people not necessarily in the United States, in other countries who want to make sure that they can flee the country with their wealth, that have more oppressive governments. You see that the Netherlands passed an unrealized capital gains tax recently, right? Like people are going to try to protect themselves from those kinds of things, and they're going to look to private censorship-resistant store of value to do that. You've seen all these wealthy Chinese internet entrepreneurs get involved in crypto back then, and now they're a lot more quiet. But they got a lot of money into the system then. So I think it's those types of politically exposed people who are the next set of buyers, just as they were the key buyers of Bitcoin during that 2015 through 2020 era.
Yeah. Tushar, I know you're running low on time. Just real quick, last thing about Zcash versus something like a Zama or a near confidential intense. Zcash had this kind of like, we're going to be the place for private value transfer as well as private store of value. I think the thesis that you guys are kind of holding tight is more of the store of value idea. What is your view on the separation from confidential USDC, USDT payments with something like Zama powering across EVM chains versus the utility of Zcash being a medium of exchange? When it comes to like this kind of on a similar track of question, how do you view the separation of use case there? And do you believe that Zcash will basically end up being just a store of value and that we'll have, a lot more demand for something like Zama's confidential USDC, USDT payments on chain? Or how do you kind of see that difference shaping up in terms of store value versus medium of exchange?
It depends on your time frame, right? Like just fast forward a few years, and I think it's still stablecoins for transfers. It's really hard to get people to rewire medium of exchange in their minds, right? Like you're already used to paying for things in dollars. And look, like us here and probably a lot of the viewing audience, like we are very tech forward early adopters, and we're able to like grasp like, oh yeah, well I could pay for something with a different currency too, right? But in order to become a medium of exchange, it needs to be extremely broadly acceptable as payment. And you're going to need the laggards, the tech laggards to be on board. And I just don't see how that happens within a few years. That seems pretty unlikely. So I continue to think payments, trading, transactions are all going to continue to be stablecoins, and using privacy protocols like Zama in order to facilitate that. And I think store of value is a separate thing. Store of value, I think the Bitcoiners were right about store of value being the market to go after. And I think that's what Zcash should go after. I don't think Zcash should be competing for, I want to pay for coffee.
Yeah, got it. Tushar, thanks for your time, man. Hope the Zcash investment does well. We're in this with you. Quite a few of my larger kind of OG friends who run different funds and stuff are also in this. Feels like this return to the roots, return to the fundamentals. And then you got Zama and their confidential transfers. You've got near confidential intents and quite a few of these other products really gaining traction. There's a lot happening here. You know, we've been saying privacy for a while, and I agree. You know, I've had this kind of bearish view for a bit, then gone bullish, and gone bearish. But I think from now on, it's very clear that this is where we're going. So thanks for being a part of the show today, and we'd love to have you back.
Absolutely. Thanks for having me. Good to see you.
All right, buddy.
Tushar.
Let's give him some love, man. Yes, sir. All right, guys. Keep it rolling, Rob. Takeaways, bullish, bearish. I mean, I think those guys probably have a 9-figure Zcash position, or at least an 8-figure, at least a high 8-figure Zcash position. And they're definitely bullish on Zama. Obviously, they've got a large investment there. I'm sure they're bullish on Near's confidential intents. I mean, yeah.
Look, I mean, those guys at Multicoin, they're based in Texas. Sovereignty, freedom, privacy are fundamental roots in Texas. I think it just goes to show that these guys, they say it, they talk about it, they walk the walk, they preach it, they practice it.
Yep.
And I think it makes a ton of sense. I mean, they're not only buying Zcash, they're also investing in privacy protocols like Zama, as well as others like Tushar mentioned. And this is happening across the board. It's not just happening at the asset layer, it's happening at the infrastructure layer. We're layering on more privacy elements. And I think Tushar's right, and I hadn't thought about it as a bifurcation in terms of, we're going to get private store of value, stores of value, but then also we're going to get privacy elements on top of the medium of exchanges that we're all used to. And in this way, consumer behavior doesn't have to change. And I think that's really important to the adoption of these things.
Well, guys, we've got Joachim, the CTO at T-Rex coming up. New type, yo, what's up? Freedom guy, what's going on? Did they ask you about the Zcash Orchard Unlimited Mint threat yet? We'll have Josh from Zcash on in about an hour and a half or so. We'll talk to him about that. Isn't Canton doing this ready? We will also have the Canton team on in about 30 minutes. Or was private? Yes, I believe it was. So guys, Joachim is the CTO of T-Rex. Rob, correct me if I'm wrong. T-Rex is bringing a lot of the privacy elements of on-chain world.
I think it's
institutions.
Yeah, I mean, when you say a lot, I think it's something like $30 billion of tokenized assets. I don't know how much of that is already tokenized versus going to be tokenized. I think we're going to get into that with Joachim when he comes up. But yeah, these guys are definitely on the frontier when it comes to tokenizing assets, both at a technical layer. I think they are experimenting with different token standards. Everyone knows ERC20. Everyone knows ERC 721 with NFTs. But these guys are working on tokenization standards specific to RWAs. This is something I talked to Joe Lubin about. He expressed how important it is to embed some of these things into the token standard itself. We're going to hear from Joachim about that. He's the CTO, so I think he's particularly equipped to talk about the technical implementation of this. But then, of course, they're also leading the frontier on the deployment of these assets themselves, upwards, billions and billions of tokenized dollars. So
let's bring him up. Let's get Joachim up. Joachim, welcome to the show. Hello. The creator of ERC 3643, the leading standard for compliant permission security tokens known as T-Rex protocol. MJP in the chat says T-Rex is Token Y, which is owned by Apex, who are huge. So it's definitely $30 billion and more. Joachim, you've got the audience here for you. Good to have you on the show, man.
Yeah, nice to meet you.
Pleasure,
Absolutely.
man. Pleasure, man.
Joachim, maybe you could just tell us a little bit about your founder story, because it is your first time on the show. It's a pleasure to have you. I want to get into the depths of this token standard and why it makes the most sense for RWAs. But before we do, would love to hear a little bit about your background, how you got into the space.
Yeah, of course. Great to be here. So, I'm Joachim. I'm CTO at T-Rex. So T-Rex is a new project that we are working on, but I've been in this space for quite some time now. I was actually there before the RWA term was even a thing, actually. So I've been working on tokenization of real-world assets for the last 8 years now. That's how I worked on the ERC-3643 on chain identities, in my job at Tokeny, where I was chief blockchain officer. Now Tokeny has been acquired by the Apex Group, as you were mentioning, which is a massive TradFi player. They have $3.5 trillion of assets under administration, all the big asset managers, and so on. So yeah, on the T-Rex network, so the idea is to create specific chain for RWAs, but it's not just another chain. The idea is to really bridge all the other chains together and to create the compliance layer on top of it. So to make sure that we close this gap at the compliance level that exists today on all these different infrastructures, especially when you want to distribute these assets on multiple chains in parallel. Because today, you just cannot do that. Like, you cannot make an asset that is compliant on multiple chains in parallel and which keeps this compliance where the compliance travels together with the asset on the other chains.
Okay. Yeah, this has been sort of the thing. It feels like the elephant in the room when it comes to RWAs. It feels like, look, we want these things to be tokenized. We want them to be composable. Because of the benefit of these things being on a blockchain, it means that we have a decentralized exchange, permissionless transfer, right? We can lend, borrow, use these things as collateral, all of the DeFi mechanisms and primitives that we've seen over the years. But when it comes to RWAs, there's a lot of, like you said, compliance complexities. Like, sometimes there has to be KYC, maybe you need to be an accredited investor, right? And if I can just swap with you, maybe one of us is accredited, one of us isn't. Where do we check to make sure that these things are compliant? And we've seen different teams do this in different ways. Sometimes the compliance and the regulatory checks are done at the base layer. Like, there are rollups, right? L2s and whatnot that are doing compliance at their rollup level. Maybe, a chain like Canton, who we're going to have later today, they do privacy and regulatory at the base layer of their blockchain. Or you could do it at the token standard, like you're talking about, or you could do it at the app level. Why is it important, and what are the benefits that you get by doing this at the ERC standard level? Why would you implement KYC and regulatory compliance and metadata into the token standard versus, implementing at the blockchain level or at the app level?
Yeah, that's a very good question, and actually that's what I've been working on for the last 8 years. So I think it only makes sense to put compliance at the token level and not at the base layer level, even if actually in T-Rex we want to also add some layers at the blockchain level itself. But that's for like the basic checks, like really to see that there is no nefast transaction happening on the blockchain or something. But when you want to enforce compliance at the asset level, depending on the type of asset, the jurisdiction in which you issue, the jurisdiction in which you want to distribute, like the type of investors that you want to target and so on, the rules are going to be drastically different. So you cannot just make a one-fit-for-all rule which sits at the blockchain level. You need to have more granularity to that. You need to add that at the asset level itself, because every asset has different rules, depending really on what you are tokenizing and in what circumstances. So that's why we are doing this at the token level. But then you have this issue, because as soon as it's at the smart contract level, but it's actually the same issue if it's at the blockchain level, once you want to distribute on many other chains, because right now you can see that everyone is creating their own chain, every big exchange is creating their own chain, actually even countries are creating their own sovereign chains and so on. So it's going to be a multi-chain world, and believing that it's going to happen on one chain is delusional at this point. So we need to be conscient of that. And yeah, the issue is that if you put this compliance layer at the smart contract level, it means that the compliance context lives in the storage of that chain, in the smart contract storage of that chain.
Got it.
So you cannot just breach the whole compliance context together with the token when you breach the token. And that's what we are looking to solve with T-Rex. So the idea is really to create this golden copy of the asset with all the compliance and eligibility rules that are enforced at this level, and then to distribute on whatever chain. Canton is actually a chain on which we are intending to be distributing as well, and to connect with them. So all the chains, EVM and non-EVM, because when you abstract the complexity on that external ledger, you can have very simple version of the token existing on other chains. So you don't even need full smart contract complexity to do it. You can distribute on XRPL, on Stellar, on whatever, and you don't need to reinvent the wheel, re-implement the whole standard. You just use their native version of basic tokens like ERC20s, and you add a hook to that is consuming validation of compliance coming from T-Rex. But yes, compliance is a very important point when you are tokenizing RWAs, because most of these assets are securities. They are not bearer instruments. Bearer instruments have actually been banned everywhere around the world in the last 50 years. So reintroducing bearer instrument with this permissionless token as if it was like a breakthrough of technology, it's a fallacy in my opinion. Like you cannot just do that, and you need to apply the same rules as on securities, because these assets are securities. And the idea that we want to do with this standard and with the way that we are working is to really say that the token is the security, and the blockchain is the primary registry for these assets, is the book of records of the issuer, and it's not just a mirroring or a wrapping or something like that. You can really enforce all these rules at the blockchain level, and you can use the blockchain instead of using a database with a transfer agent or something. So that's what we are doing with Apex actually. Apex is a transfer agent. It's a massive asset servicer, and the idea that we are pursuing with Apex is to use the blockchain as the official book of record for all these assets, and to do tokenization not as a product on itself, but as a software upgrade, if you will, of what exists today in the database of the asset servicer, to use the blockchain instead of this database.
This is one of the most important experiments in digital assets right now. Apex, $3.5 trillion assets under administration, as you mentioned. And the mission is to tokenize all of this, have the blockchain as the book of record, and serve as the ledger that is able to then transport these assets across all chains. I think this is going to become, we're going to look back in 5-10 years. Once all of these assets are on chain, they're all tokenized. We're going to look back at Apex as a pioneer for doing this so early on and doing it in such a way that they maintain the technical prowess that you have put into place. So kudos, you're doing some great work out there. I want to ask more about exactly how it works through a concrete example, because conceptually, I think it makes sense. You talk about how anything done at the blockchain level is going to be too rigid. It doesn't give the generality that you want, because all of these different assets or securities, they all have different parameters. Compliance on one asset is not compliance on another asset. You can't have the same type of compliance at the blockchain level for all these assets. At the smart contract layer, that's great. You have more flexibility, but it doesn't go from chain to chain. So you have some privacy on one chain, but if it's in that smart contract, you can't take that asset, move it to another chain. You lose all of the compliance and privacy and tokenization and all of this when you move to the next chain. So we know that we need to have it at the asset level. That is at the token standard level. So I'm curious, if I'm, let's say I'm on T-Rex, right? Or I'm on Ethereum mainnet and I want to swap, right? I want to go from these fancy new SpaceX shares and I want to swap into, some Tesla shares, right? I want to go from one side of Elon's head to the other. So how does it work if I have some tokenized Tesla, tokenized SpaceX? Let's say I'm going to buy, but I'm not an accredited investor, right? Let's say you are an accredited investor and I want to buy it from you, right? How does it work if I'm on a decentralized exchange and I want to buy this, but I'm not an accredited investor? Does it know that I'm not accredited? How much data do I have to give up to the exchange itself in order for it to recognize, yes, you meet the compliance requirements to purchase this asset or not? Where are those checks done? How much does that go in? And how is that enforced at the asset level?
Yeah, that's a great question. So the whole ecosystem is identity centric. So you have every single investor, every asset as well. So the assets have their own digital identities. Investors have their digital identity. The issuers, the agents, and so on. Everyone has a digital identity. In your digital identity, you can enrich it with verifiable credentials coming from any third party which is trusted by the issuer, such as KYC provider, AML checks, whatever. And the way to prove that you are an eligible investor is basically by having the right credentials issued by the trusted third party that the asset issuer trusts for that. So once you have that, you can bind whatever wallet you want to your on-chain identity. So it's not a whitelisting of wallet. It's like you have your identity which contains the right credentials, and then you use whatever wallets you want on whatever chains you want. You can bind these different wallets with your on-chain identity, and the compliance is done at the identity level because it cannot really be done another way. If I give you an example, if you have a Reg D in the US, you have a maximum number of investors that can have these tokens in the US, this asset. If you just do with a whitelisting of wallet, which has been done by many people before 3643, the issue is that the same investor can have multiple wallets. So how can you enforce the maximum number of investors at the smart contract level? You cannot, because you need this concept of identity. And also the identity credentials allow for reusability across different tokens and so on. And so if you have the same trusted claim issuer, which is trusted for issuing these verifiable credentials on one asset and another, and they trust the same trusted issuer, then you don't even need to redo the onboarding. You can just go from one asset to the other. So in your example with Tesla and with SpaceX, it would likely be the case that the trusted issuer is the same. So if you are whitelisted on one asset, you are whitelisted already on the other, and that you would be able to make this swap quite easily.
Amazing. It's so cool to think that we're going to have, right, these things embedded, and you might have some, let's call them DeFi purists that don't have this as part of their mental model for how the chain should work. And so we have this at the asset level. It depends on the issuer. Do you see the blockchains opting in, or is it going to be the applications that opt in to check with the issuer whether or not these things are whitelisted and whether or not they should proceed with the transaction?
Yeah, so the apps are going to embed. So we are going to have an app store, a native app store on the T-Rex network, but we are also partnering with a lot of players of the ecosystem to embed simple SDK, which is going to trigger the checks on the smart contract level, so that you can just check. It's a very simple read-only function where you can check, is this transfer going to pass or not? Is this investor eligible or not? And you can very simply display that on the interface and say, the transfer is going to fail because this and this and that reason. And if there is a way to solve that issue, like for example, you are just not KYC approved, there is metadata directly on chain at the identity of the asset level. So the issuer published this data in the identity of the asset to provide the URL to get qualified, basically. So all the apps of the ecosystem can just read the identity of the asset and say, yeah, for this asset, you need to go there to get qualified, because that's what the issuer has published on the metadata of this asset.
Yeah. Joachim, I think one of the biggest breakthroughs here is what we want in what, we've been talking about in the more kind of lower level here is what we want is privacy on public networks, right? Like that's like the big breakthrough. It's like, we don't want the intranet, right? We want to build the internet and have that privacy baked in on the public network level. And so when you're thinking about institutional users of ERC 3643 actually doing transactions on the public blockchains that we have come to know and love, but doing them in a private manner, has that like clicked to them? Because you've got to explain kind of how the blockchain works, like verifiability as a baked in property, right, of these blockchains. Yep. That's what makes them amazing. But then you've got these incidents, right, with like the Zcash orchard pool potential infinite mint bug without formal verification. And so what does that kind of conversation look like when it's like, hey, we want you guys to get all the benefits of interoperability, of shared composability across public networks, but we want to enable that in a private fashion? I'm just curious, how does that resonate with them? What are some of the kind of questions and pushbacks and things that you guys deal with?
Yeah, so privacy has been one of the major concerns since the very beginning. So I told you I've been working in that industry for the last 8 years. For the last 8 years, the answer has been always, either you do it on a private network and then you have your privacy, either you do it on a public network and then you have the interoperability with everyone. That was until about a year ago, so that's where it comes with our relationship with Zama, because Zama is giving us the best of both worlds. Basically, we can compute on confidential data the same way as we do on public data, and therefore we can apply this confidentiality at the token level, even on complex tokens like these ones, because you have to understand that these tokens, which are embedding compliance rules at the smart contract level, it has been much more complex to bring confidentiality to these tokens compared to simple ERC20 tokens, because simple ERC20 tokens, you had already like zk version of these tokens for quite some time, and it's working fine. But when you want these smart contracts of compliance to be able to check rules which are depending on the amount of tokens that are transferred and retain as well in memory what has happened on the token, because the whole stuff is not just about are you an eligible investor that is able to receive these tokens. It's also about rules such as you have a maximum volume of transfer per day, per month, per investor, or you have a maximum number of investors in a country with a positive balance, or like a lot of different rules like this, or a maximum number of tokens per investor as well. That's a very common rule. And if the smart contracts are not able to compute on these rules and to know what has been transferred already before and make some mathematical operation on that and remember it, then you cannot apply these rules on chain, basically. So that's why FHE is so powerful for this use case, is because it gives us the choice to do it on a public network and to connect, as you were saying, to the Internet of Finance, instead of having these assets being deployed on private networks. Yeah. And I think that's going to be the big unlock to bring these billions of dollars of assets on chain.
Yep.
Trillions.
So a couple things here. T-Rex isn't permission DeFi. It's stratified and high-speed rails with access to the masses, confidential, compliant, interoperable. We've got a question from the audience. So T-Rex is like proof of work, proof of stake, question mark. Who are the validators?
Yeah, so T-Rex is Ethereum. T-Rex is going to be an OP stack rollup on top of Ethereum. So yeah, it's secured by Ethereum, and yeah, that's it.
Yeah,
Perfect.
makes sense. OP Stack Rollup, we know them well, and like you said, Apex, $3.5 trillion. So it's quite a bit of tokenized assets that are coming to the Ethereum ecosystem by way of rollups. As we look and we think about the scale here, I like to say that dollar on chain tends to stay on chain. I'm curious how you see this flowing and composing with the rest of the Ethereum ecosystem. We talk a lot about perpetuals. Lighter is doing a great job with perps on Ethereum. We talk a lot about vaults. We talk a lot about some of these apps and asset layers that are poised for a lot of growth with the impending tokenization of RWAs in general at the scale of trillions and trillions of dollars. I'm curious, bringing all of this on chain, now that we have privacy, the foundation is here to scale the assets by trillions of dollars. Who are the protocols, not specifically, but what types of protocols are you most excited about that you think can capitalize on all of the new tokenized assets coming in? Is it lend to borrow? Is it decentralized exchanges? Is it perps, vaults? Who do you think are the protocols that are poised for the most success as a result of the tokenization super cycle?
Yeah, so I think in our case, because Apex is mostly servicing like funds, private assets, private equity, like it's mostly private assets, it's not stocks. So the most important for us is mostly these assets are illiquid, and is to provide these facilities of lending, borrowing. I think that's the most interesting use case in this type of assets. After that, of course, secondary market, instant primary market, subscription, redemption, and open-ended funds with instant NAV. That's a big stuff that we are working on, to have the possibility to derive an instant NAV for subscription and redemption based on previous NAV and projections and volume of transactions and so on. So that's the things that we are working on right now. But I think that as soon as you unlock transferability for these assets with the tokenization, then you unlock what comes next, which is secondary market, and then we can go to more developed ecosystems, I guess. But transferability, it sounds like not such a big deal, but transferability is a big deal for this type of assets, because right now, if you want to just transfer shares of a private fund or a private equity company, it's going to take days, if not weeks, and a lot of paperwork. Now we can do it in one transaction on chain. Everything is automated. All the checks of compliance are automated. That's a big deal already.
Love it. Joachim, man, thank you for coming on. Congratulations on the growth. Look forward to the chain launch. And honestly, just on the growth of this standard, right? The 3643 ERC standard. There's been such a struggle inside the Ethereum ecosystem to actually get standards to become commonplace. And it's very clear that this is becoming a true standard for the institutional adoption of Ethereum and of confidentiality on chain. And so, keep going on that, because it's, as I said, it's been extremely challenging for standards to become standards.
But it's extremely important work. Like we need this in order for the community to rally around, for institutions to look at this as a proof of concept and say there's real money at stake here, and it's building resiliency in this standard. So thank you for fighting the good fight and onboarding the institutions. We appreciate the hard work.
Thank you very much, and completely agree. Yes, standards are very important. Without standards, we cannot scale.
Absolutely.
onwards.
We'll
let you get back
we'll
to
see you
the
next time.
vibe coding on Claude Code and Cowork and GitHub. Thanks for your time.
Thank you very much. Bye-bye.
See you next time. Thank you, Joachim.
Cheers, man. Bullish. Those guys are huge. Interoperability while being compliant. Jason says bullish, compliant, freedom guys, bullish. Wow. Good vibes.
Great vibes. Joachim is what I like to call a giga brain.
Yes.
Apex is $1 trillion in assets. This guy is working on the solution that is going to tokenize trillions of dollars of assets. And he walks through exactly, how the metadata works, how it should work, right? Why it belongs at the asset token standard layer, why it doesn't belong at the blockchain layer or the smart contract layer. There are checks that we can do at the smart contract layer, and we will do those checks. That's effectively like, hey, those are checks on the user, not on the asset. And if we have the asset, we can carry through some of these metadata properties. Like the asset is going to say, hey, this needs to be owned by an accredited investor. The smart contract is going to look at the user and say, you are or are not an accredited investor. Yes, you can buy the token or you cannot buy the token. So, we're going to get into a world where we do have a lot of permissioned finance, but things like Joachim is building are going to help us build protocols that allow us to orchestrate and compose between permissioned and permissionless finance.
Yep. That was my point, right? Coming onto these public chains. Speaking of that, we've got Eric Saraniecki, co-founder of Digital Asset and Canton. He's going to join us next. Bitcoin advocate since 2009, co-founder of Cumberland DRW's crypto trading desk, and co-founder of Digital Asset. They just announced a $350 million raise. Wow. So that was led by some of the big VCs in the space. $355 million raise. They're doing $4 trillion of brokerage repo on Canton every single month. We're going to talk privacy. We're going to talk institutional adoption and more with Eric. And it looks like he's in a beautiful downtown New York City. I'll tell you that much. So let's get Eric up. Let's get this show on the road.
Hey, go Knicks.
Yes, sir.
Go Knicks.
Go Knicks is right. Eric, what's up, man?
Nice to see you guys. Thanks for having me back.
Absolutely.
Yeah,
Thanks
man.
for coming back.
We, since I saw you, you guys raised $355 million. So congratulations.
Thank you very much.
I assume that was a little bit of extra growth capital to take on the vision and mission of Canton. Would just love to hear more about it, the process, kind of the investor base, and some of the reasoning there.
Yeah, so DA is pretty unique in the sense that we have almost exclusively been funded by our customers for the better part of the last 12 years. And this was the first time we took on like real venture capital as part of this round. And a big part of that logic was just to help us think about these broader market implications, not just the capital markets. So the capital markets was a really important part of our foundation story, and it's really the bedrock that we're built on top of, but our aspirations have always been much bigger than that. So the venture capital was specifically Andreessen is a really good opportunity for us to just think a lot broader and get some really strong expertise and guidance in that regard. And in terms of the capital, we're a profitable company. We didn't need the cash, but it's always good to have cash on the balance sheet. It allows us to be a lot more direct and have greater agency where we want to lean in and put more direct, sort of action into making certain things happen in the network.
Absolutely. Eric, I think our community has seen how you've been able to foster relationships with, some of the largest financial institutions in the world. They're using Canton and they're deploying, their solutions. And there's all sorts of different solutions that you guys are working on as it pertains to, payments and repo and all across the docket. What are you guys planning on? Maybe there isn't a great answer as far as like how you plan on using the cash right now, but aside from just having the cash on the balance sheet. But I guess more generally, what does the adoption curve look like ultimately to take these use cases that are currently running, some of them on testnet, some of them on mainnet, not only expand the use cases, but expand the depth that you have in each of the pockets of the financial system right now?
Ooh, yeah, I could talk about that for an hour. So, I don't know if I've ever given you guys the triangle before, but for me, our core focus is in this triangle in any given market. And it is the cash on ledger of every form, because they're all valid. They all have different purposes. So tokenized demand deposits, stable coins, and various other interesting sort of ways of doing that sort of cash on ledger element is coming. The second point here is short duration govies. And the third are the spot and repo markets for it. And the most important thing is to get that triangle really deep and 24/7. And like, it's pretty unsexy. I sometimes call this like the back end of your stablecoin. Everyone's familiar with USDC, USDT, or the thing that they have in their wallet. That's the front end of their stablecoin. The back end today is 100% off ledger. You're holding treasuries off chain. You're completely subject to a Monday to Friday 9 to 3 market hour structure. And I don't think people appreciate how much pressure that puts on those originators, how much effort goes into maintaining the back end of that product. But it also hurts the quality of the product. If you're a large capital markets participant and you want to take a stablecoin as a margin payment, you don't want to carry a stablecoin over the weekend. So if you don't have any fungibility on a Saturday afternoon for that, and if you do, but it's light in the secondary market, or you might be borrowing someone's balance sheet to do it, then you're going to use that in a really small envelope. So if you can get that triangle really going, then it is applicable everywhere. And if you think about the way money is pre-positioned around the world in so many different use cases, if you're talking about international remittance or card payments, or even things like pharmaceutical co-pays or prepaid debit cards, it's kind of unbelievable how much pre-positioned capital you have in the world and how it has to sit cash, because you don't really know when those liabilities are going to come in. And one of my core goals is to make it that money becomes more or less a just-in-time concept. And you can think about treasuries as being kind of like a capacitor. So rather than pre-funding billions of dollars of cash, I can pre-fund this capacitor of a treasury. And if I have the primary and secondary markets available, then I could draw against that in whatever makes the most sense in my context at that time. And so in the US, we're really well advanced on this. We have many different deposit tokens, we have stable coins, we have treasuries in many different locations, we have really great venues, we have all the really largest market makers in the world starting to kick off 24/7 liquidity provision in this. So in the US, we've got a great start, but our focus, we made an announcement with Mizuho a few weeks ago. They have a really large JGB presence. The moment you have two of these triangles, you now have the two deepest markets on earth, FX and bonds. And if you can make that a 24/7 deep market, you could rewire all of finance. If we won equities and lost short duration govies and repo, I would feel very nervous. And the inverse, I'd feel very confident. And just kind of, I don't know, just a point of emphasis here is like, if you're trying to settle equities in the Japanese market, the timeline for their settlement cycle is largely dictated by CLS today, which is the pace at which I can get cash in and out of Japan. And like so much of what we do hinges on, can I get money in the right place at the right time? So we really consider this to be the core primitive, whether you're talking retail, whether you're taking wholesale, whether you're talking payments, remittances, capital markets. It just kind of sits on top of this financing and delivery market. And that's where the bulk of our focus goes. And in every market, it's a different partner, it's a different emphasis, it's a different way of bringing it online, it's a different value prop. Maybe access matters more in one area than another, maybe liquidity matters more in one than another, maybe FX matters more in one than another. So there's no one size fits all, but our goal is to win that, for lack of a better expression, triangle in every ecosystem that we can.
Yeah.
Yeah. And where is Canton at on this journey of the triangle? I think it makes complete sense. You're talking about the foundational building blocks of our entire financial system, rather than going for kind of the hippity top of that. You're going for the foundation itself and letting that scale naturally from there. So it makes a ton of sense as far as the go-to-market strategy. Where are you at on this journey, and who are the biggest fish to fry to ultimately bring into the network to get you, 10 floors higher?
Yeah, I might have said this on your show last time I was on it. I think you have to they're not parallel motions, but they are separate motions that have to converge, which is you need to support the rapid innovation ecosystem. Let's just call it the on-chain native audience, because the quality of the feedback loops you get from that group is very high, very fast. So you can get sub 24-hour feedback loops from that ecosystem. They can even incorporate any protocol changes or upgrades you might make very quickly as well. So the feedback loop, and a lot of people give soul for shit where they're like, no, meme coin trading was really great to strengthen us and harden us for this moment that came up. I actually am a full subscriber to that. I completely agree with that strategy. And so we think a lot of this crypto native ecosystem as really hardening and improving the quality of the ecosystem. But it also gives us a playground to really push the boundary of access. So I use myself, no offense to Tally, but I call myself the anti-Tally. I'm trying to move my entirety of my portfolio and everything that I do in my financial life on chain. I get paid on chain. I'm trying to lend my stablecoins via a wholesale capital markets repo transaction on chain. I'm in the process of rotating my PA on chain. Everything that any closed-end fund stock, et cetera, that I hold, my RAA, et cetera. And if I can find a way through the right account structures, intermediation, protocol and wallet ecosystem for me to be a counterparty in a repo transaction, there isn't a Fortune 1000 company on earth that would struggle. And so I think it's both the feedback loop and the iterations that you get from the retail audience, but also being able to push that boundary out and really understand the totality of access in the right way that then allows the scale to come in behind it of the really large institutions. I don't play chess, but I've sometimes used this analogy of the opening, middle, and end game. Opening game, you need the pieces on the board. You're kind of rote following exactly a specific move and you're in position. The middle game is where you flex your edge and you're competitive. It's the most dynamic part of the ecosystem or the game. And then the end game is your hyper ruthless, efficient kill shot. And I think of the really large TradFi participants we have as being largely the end game. They're going to be the ones that come in with the massive scale. And you have to just be progressing in that direction and make sure that you meet them where they need to be in order to do that. But all that being said, we have some incredible commitments into the ecosystem. I don't know if you guys caught this, but SocGen made a public commitment to start doing collateral on Canton. And there's a lot more like that in the pipeline where you have the forward-leaning primes and clearinghouses that recognize the value of this 24/7 capability, and they see it as an opportunity to win markets, parts of the market they may have lost in the past. So it's not purely sequential, but I do definitely think of those two as having different value props.
I'm sure Andy has plenty of questions here, but I just want to ask, because I love the analogy, and you mentioned how the institutions that are in the partner network of Canton are part of the end game. And I think people can see that vision. And you also talked about the triangle and how you're starting with the foundation of this financial system, tokenizing it. You're also sort of reflecting on yourself and your own investments and access and thinking, let's get all of these elements, bring my personal financial life on chain so that you're a representation of your peers and others can follow and have access to similar products. My question is, what is Canton's middle game? Because I love this analogy, and you talked about how this is the most dynamic part. This is where you affect your edge. What is Canton's middle game, and why is it so important?
I think people are going to be surprised by how much of this TradFi element becomes available in various different formats in the next low single-digit months. There's so much. It's so easy to think it just has this binary switch at the end, as opposed to this slow burn of their own adoption. But as they open and turn something on, I fight my ass off every day to make that accessible to a bigger ecosystem than what they have today. And I think about the whole virtual bank account ecosystem, how quickly that happened once one or two entities decided to enable that type of infrastructure. And we haven't seen the equivalent on the securities side or these capital markets ecosystems. You could argue that what we've seen in DeFi is a glimpse into what that could be, but the products that are available there are not always the highest quality collateral. So if you can imagine that sort of merging of that experience of a 24/7 ecosystem accessible to a broad audience, but over the real asset and in the right venues with the right counterparties and liquidity, that's what I know we will accomplish over the course of the rest of this year. And the end game for me is scaling that. It's not the arrival of those participants at the end game. They are showing up right now. Right. And there are things going online right now that you'll probably see the first expression of it in some interesting sort of retail adoption. Or, retail is like all too often thought of like P2P individual, but what I mean is like access to a part of the market that others might not have had access to before in an understandable way. That's what I mean. So the middle game is like expressing that audience that we have and that access that we have into a new ecosystem and demonstrating that capability as the numbers ramp up.
Yeah. Eric, we're on a privacy day today as it pertains to this mid-game, end-game, and the beginning of the game, the pre-game. What is the kind of current state of feedback loops as you described with on-chain users, but with allocators in the repo market, outside of the repo market, in the bond market, et cetera? I think you're taking a flight somewhere today to go talk to somebody who's probably important. What is, like, when it comes to this privacy aspect of Canton, is it resonating well? Is it just really understandable and easy to grasp? Are you guys thinking about changing any aspects of how kind of your global synchronizer kind of works, or changing any aspects of how you guys are implementing more private features into the chain? Just give us kind of a lay of the land and perhaps what's next, what feedback you've been getting.
Yeah, that's a great question. So, I mean, we're evolving constantly. I get feedback all the time, like, no, come on, it's too fast. The evolution's a little too fast, and there's some truth to that.
This guy,
a lot of it tends to be kind of in the very quickly evolving tokenomic space, not so much the protocol. Something that's really important for us this year is figuring out universal ecosystem pricing. So right now, all of the burn is associated with activity over the global synchronizer, but we are very proactively looking at how to make the price to use the network, private sync or global sync, a universal pricing mechanism, and trying to figure out how to do that the right way. So that's a really big to do this year. Because for us it's one network, and too often if it's like, oh, the global synchronizer has this pricing model and the subnet might have a separate pricing model, it kind of helps reinforce this misunderstanding that it's like a disconnected ecosystem. Instead of just, no, like, hey, I have SLA requirements, I need some dedicated infrastructure, I'm an extension of the network. That getting a universal pricing model for everybody, and when we say pricing, we always mean burn, right? So ultimately that translating down into burn for all users. That's a major priority for us. It's something that takes up a lot of my time. And then in terms of the adoption, a lot of people are like, oh, we don't really have an access problem in markets. But that is true from maybe a speculative standpoint, but not really from like a capital markets standpoint. For somebody that wants to take, here's a common problem I'm seeing emerging right now. There's a big fintech neobank emergence where they're accepting stables as deposits. And then the bank needs to do something with that. And if you're a regulated bank, permissionless DeFi is not necessarily the right thing for you to do with those deposits. And they're looking to get low friction access to treasury markets. And that's been a persistent problem for the crypto exchanges. You go look at any of the crypto exchanges, they have very similar sorts of problems. And everybody keeps trying to push this back onto the issuer who has the same constraints. So 24/7 creation redemption, we're working on this in stables, we're working on this in ETF ecosystems, we're working on this money market funds, have the same constraints. They forego yield if they manage to issue something off hours. We're working on this in every dimension because it's the same thing. You have this combination between the underlying and a broader access vehicle, and being able to make that a seamless 24/7, operationally extremely tight experience allows you to kind of solve both problems. Bring capital markets to a broader audience and not violate all the sort of command and control needs that you might have on the capital market side.
Yeah.
We obviously this is Privacy Day, and there's quite a bit that we can dig into on that side. But you mentioned the burn. I'm just curious how some of these mechanisms may work as you're bringing more of the burn to the subnets. Is there network extensions or subnets or generally use cases that tend to burn more than others?
Yeah, I mean, of course. I mean, anything that's higher velocity than lower velocity is burning more, right? So the entire tokenomics of the network is predicated on the core thesis that the value of a blockchain is about increasing the velocity of assets. And all of the fees and all of the fee distribution as rewards is predicated upon rewarding the things that are higher velocity. And to give you kind of, two completely opposed points of view, if you solved for TVL and $1 trillion of treasuries showed up and they just were parked in an account, we haven't really solved any problem. But if someone brings a bunch of treasuries over and they're like, do you mean to make money over here, I have to figure out how to make it go constantly? Then we're incentivizing them to figure out how to increase the velocity of these assets. And the velocity comes with utility. It means, okay, I'm going to pledge it here, and then, I don't know, I'm going to use an eligibility schedule. It just got a little bit cheaper to pledge this other thing instead. It's to my advantage to do it. Or actually, I want to make sure that these are tradable or that these are lendable. Like, enabling those experiences are what bring the velocity. So I've kind of generally rejected access as the reason to be on chain in favor of utility, increased utility surface. And the way you would measure the first would be by TVL, and that was the classical stablecoin monetization model. And I would classify the second by velocity. And we built the tokenomics really around velocity.
Yeah, yeah. Eric, kind of a bit of a pointed one here. We just had some folks on doing a lot of institutional work from the Apex group, and their big thing here is building compliance standards, specifically ERC 3643, to allow institutional allocators and participants to come onto public EVM networks and participate in a compliant private fashion. And the take here is that what they're trying to build is the internet, right, where you have privacy capabilities that are compliant enabled, but you also have this public layer underneath. And when you look at something more in the direction that Canton is building towards, it kind of comes to the whole debate that was Yuval and Alex G from zkSync about this kind of permission chain conversation. But I think more nuanced here, the question is, how do you anticipate the growth of private capabilities upon public blockchains versus the ability to just consume and use private blockchains by design like Canton? How do you think about the types of adoption and the differences in use cases from these separate concepts of public blockchain with privacy capabilities enabled versus a by design private ecosystem?
Yeah, I mean, as usual, I'm going to just reject the premise. I mean, I know people love to try to put us in this box that we're a private blockchain, but it's just not true. I mean, I can't tell you the number of hours of sleep and restless nights I've lost over helping under hack attacks or Sybil attacks or weird tokenomics attacks that come from pseudonymous actors in the ecosystem that have come through the path that everyone's allowed to come through. So I assure you, no one has borne the brunt of the permissionlessness of our network more than the person on this call right now, and I can fully stand behind that fact, and it will just increasingly become more and more available. What people don't have a positive reaction to is that the way you become part of the governance ecosystem is not just a cash quota number. Okay, I could go become part of the mining set in Bitcoin by ponying up the right number of hundreds of millions of dollars, and that's a very simple equation. But the cheapest thing you can extract from anybody in this world is money. It's so much easier to get money, especially from a large institution, than it is to get their sweat equity and their commitment. And so what we've gone is down the path of instead extracting a commitment to deliver something meaningful to be part of that governance set. Now, if you want to label this as, okay, that means you're a permissioned ecosystem, it's ignoring all the nuance of it's an open source platform. Anyone can deploy any component at any time, do anything that they want. We're just saying that to participate in the governance of the global synchronizer and the tokenomics, so it's one element of the broader network, you need to commit, sweat equity. If that makes us permissioned, I mean, I guess whatever. Go sit and spin, I guess. But I find it such an annoying argument. And on the flip side, every other ecosystem must implement privacy, or they will be completely irrelevant. There's just no other path. And it's not, we always say privacy. It's not blanket anonymity. It's that you determine what is the right appropriate amount of data to disclose to whom and under what conditions. And so, like the snarky way I would have responded to your question is to say, it's cool to see everyone come our direction. And they would never acknowledge it and they would never admit it, but it's pretty cool to see everybody come our direction. And I think that's a pretty big validation. And then, at the end of the day, I think what's going to win is utility, right? Like it just like anything else in the world, imperfect solutions win if it happens to get to the critical mass that people need for it to deliver the utility that they need. So I've never rested on our laurels of having privacy as, okay, we can pack it in, boys, we've won. It's okay, cool, we have this entry point and wedge into opportunity, but we have to turn it into real utility. And that's really where our whole focus has been. So yeah, I fully support everybody coming our direction. It would be great to have more contribution to this kind of general sort of approach of selective disclosure. And I don't think that crowns a winner one way or the other.
Yeah, fair enough.
Yeah,
fair enough.
Everyone certainly is coming in this privacy direction. I think they also are the pie in the sky is privacy with composability, and I think this is where we still have a lot of work to do, because we do have somewhat of these disparate ecosystems, but the more that we can compose amongst them, the higher velocity that we can expect, because more optionality I'd imagine will typically lead to more utility and therefore higher velocity of these assets. And so, we're having this conversation about this new token standard. This is on the Ethereum world. You guys have this CIP 56, I think, is like the primary token standard over on Canton. And I'm just curious, do you guys implement this the same way? It's essentially like you have this metadata, you can bake in, okay, this is an asset that requires, accredited investors, and then you do some checks, right, that say, yes, you are an accredited investor, you can own the token. Just to wrap up, like how does, the privacy function work on Canton?
Yeah, privacy, and by the way, composability is the hill that we die on. There is not anything that makes it through our protocol design that would in any way interfere with composability globally. Subnet, mainnet, doesn't matter. It is the whole reason to be on chain. If you are doing anything and introducing anything that interferes with it, I think you're going to end up in the same L2 morass that everyone else has landed in.
And does that extend to like cross-chain composability if you wanted to put, a Broadridge repo security in the same vault as a tokenized SpaceX? Like that is the level.
On Canton? Across subnets, you mean? Is that what you mean?
Yeah, I guess.
Yeah, 100%.
If there was a tokenized share that originated on another asset, but then it got bridged to Canton, you could combine them, and vice versa. You could bring in the Broadridge repo security out of the Canton network, put it somewhere else. Like,
yeah, you can, of course. I mean, we've got great partnerships with Chainlink and Layer 0. They're working very, very hard to bring your standard bridging, but that's not composability, right? That is the exact same risk that we face today in our financial system. Okay. If one side halts for any reason, or something goes wrong on one side for the other reason, you can have incomplete settlements. You can, and until you have transactional atomic composability, guaranteed at the protocol level, universally across smart contracts of any type, the same thing you enjoy on ETH L1, Sol L1, until you have that across every bit of your ecosystem, you don't have composability. Now, a lot of people, you push them behind closed doors, and they'll say, yeah, but we're close enough, so why not just call it that? I've heard that argument many times.
We've heard that too. That usually doesn't happen on the show. That happens at conferences when, like you said, behind closed doors.
It's such bullshit. And like the thing is that is the hill to die on. And in Canton, the whole global network, the whole global ecosystem, that is the number one priority, is maintaining global composability at all time. So, and preserving privacy through it. This is where, I think people really underappreciate how much bigger a problem privacy is to solve for than scaling was. Because everyone followed a very similar path on scaling. It's like everything was slow, and yeah, we know we need it. And then, people started showing up with speed, and it eventually became relatively ubiquitous, right? And you're solving bottlenecks, but not architectural things. When you're talking about composability and privacy, a very simple thought experiment I like to ask people is, cool, we just brought your doctor on chain, and we just brought your bank on chain, and you want to pay your doctor bill, which is a common source of reconciliation. Do you want your doctor to find out how much money you have in your bank? Do you want your bank to know why you went to the doctor? Because a lot of times that is actually the trade-off you have to make in the privacy solutions in these other ecosystems, or to do some highly coordinated, two-way free of payment transfer, and then call that composable because some other system coordinated it in a relatively low latency way. And like, to me, both of those things are unacceptable solutions, because maybe you've reduced the timeline of that risk, but you have not eliminated it. And it's a fundamentally different problem if I'm trying to create a stablecoin with a treasury, and I've accidentally somehow delivered or encumbered my treasuries and not received the stablecoin. CEOs are getting woken up. If I try to do that and it just didn't complete, an ops person's getting woken up and they're resetting the system. It is a fundamentally different risk system, and you have to hedge it differently. You have to have different processes for it. Your entire business is fundamentally different, right? And so if we're genuinely interested in enabling these sort of really low latency agentic experiences where my robo-advisor is literally an AI agent on top of my wallet, well, we need to make sure that I have not introduced weird intermediary risks where actually maybe the agent has that money suddenly, or like this one entity. Like, I want to know that the decisions it makes complete or don't complete, and that I'm ending up only in, I kind of jokingly call this like the hostage handoff, right? There's no scenario under which I can give up the girl and not get the money, right? It's crazy, right? So if we really, and that's where the latency is in our system today, is coordinating that handoff and making sure that we don't run into those problems, and then injecting a shit ton of risk capital to prevent anyone from being out of bounds if something bad happens. So you have to eliminate, not reduce, eliminate. So privacy plus composability is a very, very hard problem set to put together. There's a lot of great stuff going on to kind of introduce privacy, but in many instances, it throws out composability. And then again, it's just like, what really is the point?
Yeah. Well, I mean, this is the very difficult problem has resulted in a lot of idle capital in off-chain traditional markets, but this is the capital efficiency that we are aiming for, is unlocking all of that idle capital, because we have unlocked atomic composability or composability plus privacy. That would allow us to have all this, the hundreds of billions, trillions of dollars that's just sitting there in case something wrong happens.
Yep.
Don't need that sitting there anymore. It can go be productive, right? Because we can pull in liquidity just in time that we need it in case we need it.
Yeah.
So,
I mean, flash loans are the coolest thing I think I've seen in the DeFi space. Like, hey, I've identified an ARB. I can execute all legs of the ARB and borrow the capital I need to execute the ARB and return it in one transaction, is so sci-fi from a finance perspective. But really, I think the destination on a lot of this stuff.
It feels like teleportation.
Yes. Yeah, it does. Absolutely. I mean, it's like the old, I don't know, you guys probably didn't do econ, but it's like the old economist joke. It's like, hey, is that $20 bill on the ground? It's like, no, it couldn't be, because if it was, someone would have picked it up already. Like, it feels like it's that sort of conundrum all over again.
Yeah.
Well, Eric, go Knicks, man.
Yeah, go Knicks.
Go Knicks.
I guess you're gonna miss the parade on Thursday. I assume, but not sure if that's your vibe. Anyways, looks like you're somewhere nice downtown. So
yeah, thanks for having me. It's always a pleasure.
Absolutely.
Yeah. Safe travels, buddy. All right.
See you again soon. Thanks, Eric.
Bye.
Yes, sir. 15-cent stable coin. Gotta love it. Alrighty, guys. Up next, we've got Rand, the CEO of Zama. Man, the privacy day is kicking right now.
I think we're trending on X.
Smart guy, awesome segment. Thanks you, Rugrat. Thank you, MJP. Why is WorldCoin flying this past week? I don't know. I do not know. We've got the Fed decision on rates in 25 minutes. We've got Ren Hindi, the CEO of Zama, joining us. They have just launched what is the very first confidential, I guess, yield farming. I mean, for lack of a better term. We're going to pull it up. We're going to talk to Rand about what that even means. Why Morpho, why confidential yield, and what this means. There is the very first DeFi integration with Morpho, letting you deposit confidential USDC into Steakhouse's USDC Prime Vault. We're gonna talk about that and more. Let's get Rand up on the show. Let's give him some love. Rand, confidential DeFi, privacy day on the Rollup here with Zama. Great to have you, man. How are we doing?
Very good, very good. Good day today. I always love it when we launch a new product. It's always very exciting.
Yeah, man,
Absolutely.
great timing here. To be honest, I wish we could take credit for that being planned. Sometimes it's better to be lucky
It
than
was
good.
not. Everybody should know it was not.
Sometimes better to be lucky than good, isn't it? So, guys, Zama's launched this new confidential USDC product, this first DeFi integration with Morpho. And it's not a new vault strategy. It's not a new lending market. It is the same strategy, but it is fully confidential. Rand, talk to us about this launch, what this means for Zama, what this means for DeFi. Welcome to Privacy Day. Great to have you.
When you think about finance, what do people really do with money? They pay things, so you need payments. They trade things, so you need swaps. But they also want to borrow money, right? So you need lending protocols. And importantly, when you have money sitting around, you don't want it to just sit around. You want to make some yield on it. And if you want to build finance on chain, you're going to have to address each of those things. And whether these things are done confidentially or non-confidentially, we can debate, but they have to exist. So our goal with Zama is to offer this entire suite of financial products, but with full confidentiality. We want every payment you make to be confidential, every trade you make to be confidential, every position you hold in a vault to be confidential. And so what we launched today with Morpho is the first step towards that, is the ability to hold dollars, USDC, and earn yield on it without having to use a new, unproven, untested DeFi protocol. You take your USDC, you shield it into confidential USDC. Nobody knows how much money you have or how much you're going to be depositing. But now you can actually deposit it in Morpho Stakehouse Prime Vault. It's the same strategy on Morpho protocol, on Ethereum. This is not a new thing. And this is really, really important because as we build natively confidential DeFi protocols, there needs to be a way for people to start making money with existing DeFi protocols. And this is exactly what we enable today.
This is incredible. I think I'm curious, honestly, actually, to hear about the scale at which you foresee this pool, because we're going to start to see deposits into this. I'm just curious, what are your internal projections? Are you looking billions?
Let me ask you a different question.
Okay.
Why would you not shield your assets if you can get exactly the same yield opportunity from exactly the same protocol and strategy and curator?
This is the question. It becomes a no.
There's no reason.
Yeah.
It's like if you can send someone an encrypted message, why would you not?
Yeah.
Right? If you can access a website encrypting your data when you're sending to it, why would you not? Like at some point, I think privacy becomes so seamlessly integrated that it becomes commoditized. And if someone doesn't use it, they need a really, really, really good reason. Mm-hmm. And I think what we proved today is that earning a yield on your dollar is not a good reason to not shield it anymore. Like you can actually shield it and earn it exactly the same way as before.
And so
Rand, if I was just to push back slightly, not to be the thorn in your side here, I feel like privacy is something that it's got this kind of paradox where it's got this stated belief problem where it is often a stated desire of somebody to be private, to have private messaging, to have private, finances, to be private in their life. But then the action does not typically reflect the stated belief. We still post on Instagram. We still text on WhatsApp and on iMessage. People still do NSFW FaceTimes. People still do public blockchain transactions with large amounts of capital. What do you think bridges the stated belief to actual human action dilemma? How do you think about solving that as part of this product launch as well? Because it's deeper than just, hey, I got some cash, I'll put it into this private pool, earn yield. It's like a deep human psyche, kind of psychological issue. How do you think about this?
I mean, I think you're right. And the way I see things evolving in the future is that nobody's going to care about privacy. not because they gave up, but because it's going to be by default in everything they do, and so it's just not going to be a question anymore. Like you will not have to actively pursue privacy because it'll just be there. Again, taking HTTPS as an example, when you connect to a website and you want to pay something on an e-commerce on Amazon, right? You put your credit card number. You're not thinking about whether your credit card number is encrypted or if it's going to be stolen by someone who's just like eavesdropping on the internet, because it's by default it's encrypted, and that's how the internet works today. We want to get to that point with blockchain transactions. We want to get to the point where you just don't discuss privacy anymore. Privacy should not be a narrative. It should be by default in every transaction we do. And so how do you do that? Well, it's a question of distribution and adoption. And earning extra yield, having access to new products is a way that you can start moving people toward, privacy by default products like the Morpho Vault we just launched. And once they're in the system, you want to build enough utility that they never have to leave it again. And so that's why I'm saying earning yield is just the first step. You want confidential swaps. You want confidential payments, and you want all of that to be integrated with your wallets, with exchanges, with custodians, with your credit card. But the whole ecosystem has to adopt this new privacy standard, Zama, in order for this to become invisible. But that's the point. The point is that people should not care about it.
Yeah, so the thesis is just by default, this is not going to be a question anymore or a choice. It's just going to be the standard. And part of this as well from today is this growing use of DeFi from institutional allocators. I've got a panel next week here in New York. It's at this conference called Tokenize This, and it's with some of the largest allocators in the world, and we're talking about vaults. Right? And we're talking about what vault adoption looks like, what that means, how that's going to happen, why they're so bullish on it. And I refuse to believe that, vaults will take off in the public, transparent form that they exist in today. And so maybe you could speak about the institutional thesis here for this Morpho Vault and what you see as kind of the ever-growing use case and customer base for the evolution of Zama's product with Morpho and with other, kind of like DeFi protocols. What is that customer base, and how do you think about that like institutional era of vaults?
There are different reasons why people want privacy. Some people want privacy because they don't want their neighbors to know how much money they make or what they're spending it on. So if you're a neobank and you're using stablecoins, it's very obvious to me that you want privacy for payments and for the accounts of your customers. Like no bank today, go to someone in the street and tell them, show me your bank account. They'll look at you like you're a weirdo, right? And so there is no reason to believe this won't be the case for on-chain banks using stablecoins. So privacy there is going to be honestly like just a very obvious thing people are going to do. The second thing people want privacy for is keeping their assets and revenue hidden from their competitors. If you're an international company and you're doing business in different countries, you're getting paid in different currencies, and you have to move money between your different subsidiaries, do cross-border payments. These are huge use cases for stablecoins, massive trillion-dollar use cases for stablecoins. You cannot do that if you're not hiding those movements. You cannot have a company entire books completely open to the public for any competitor, anybody to actually see. It just doesn't make sense. So here you want confidentiality. And then you also have investors. If you're a large investor, you need confidentiality if you want to be able to make returns on your investments. VCs on average, when they invest in crypto, the moment they move their allocation to an exchange to sell it, which by the way, they're entitled to do, they're investors, that's what they do, make money, right?
Yeah.
The moment they move it, they get front run, there's signaling risk, the token dumps. They lose 20 to 30% of upsides because of a lack of confidentiality on their ability to liquidate their investments positions. You have to understand, when a VC doesn't make money, they cannot raise a fund to invest in new projects. The whole ecosystem suffers from the lack of ability of investors to exit their position without front running. It's a massive, massive problem. And finally, vaults. Vaults, I think, are super interesting. Today, we think about lending as a way to make yield, but I actually see vaults as something is going to evolve to be a strategy for whatever can bring yield in the future. A fund manager is probably going to offer a vault for people to invest in his funds in a kind of DeFi capacity. But that fund manager probably wants to keep their strategy private. So here, it's not just the deposits that you want to keep private from the LPs, it's potentially the whole on-chain strategy of the curator that you also want to keep private. I mean, if it's not, why would you pay at a premium for someone else to manage your money if you could just copy trade everything they're doing? So I think in general, as different strategies move on chain for lending, for hedge funds, for trading, for whatever else, confidentiality will be completely normal, completely by default in what people do.
Yeah, and I think, and I just want to kind of circle back to the stated belief problem that Andy had mentioned, because I think there are alternative, so I looked up, because actually someone close to me said that, they use incognito mode every time they do search history now, and it kind of surprised me because I don't always do that, but I do it sometimes depending on what I'm searching. And so some data here is that back in 2016, so 10 years ago, almost half of the people, 45%, said that they used a private browsing window at least once a month. If you fast forward to today, actually it's from 2024, but 50% use incognito mode regularly, and over 75% of the Gen Z population use it regularly, meaning that it is increasing as more young people are protecting their data. So I think the trend is that people are taking this more seriously, and they're choosing to go incognito, choosing to default towards privacy more, especially as the solutions, the privacy alternatives, are getting easier and easier, and there's no more lack of convenience. I think that's typically why confidentiality has kind of gotten to the background, is because it hasn't been convenient.
Important, right? So I think one of the reasons why we're excited about Morpho specifically. So first of all, they're French. I'm French, so that's nice. Right? But joke aside, I think Morpho is an incredibly talented team. I mean, these guys are good. Like, they're machines at execution. Honestly, like, probably one of the best startups that we've had in Europe in a very long time. So I'm very excited about working with people that provide a real utility and a real product. But beyond that, I think, Morpho is actually turning into, I would say, like the central place where people are going to go to offer strategy and to make money from those strategies, right? And we don't want to recreate another Morpho. There is only one Morpho, and there should be only one Morpho, and that's their job, is to do that. What we want is to have a way for people to plug into that, have all of the advantages of Morpho without having to take the risk of using a new protocol. And if there's one thing we learned about DeFi, is that it's very risky to actually use a new unproven protocol.
Yep.
And so I think what we're going to see over the coming years with AI and everything is going to be a consolidation of liquidity around a few battle-tested protocols. And Morpho is definitely going to be very high on that list. So, making a bet on working with them is not just a bet on any random DeFi protocol. It's a bet on a protocol that we consider to be extremely robust against potential risks that we cannot manage at our level.
Yeah, it makes complete sense. And I think you guys are now working with Morpho. Morpho is going to be around for the long haul. We're starting to think about what this looks like for securities and real estate. And as every asset becomes tokenized, comes on chain, it probably ends up as a form of collateral deposit in these vaults. And as Zama makes these vaults confidential, it becomes default, not just easy or commoditized, but actually default, right? Which I think is going to make it as ubiquitous as possible. And so my question here is, you've got this first confidential USDC DeFi yield venue vault on Morpho launching on the 23rd of this month. I mean, how quickly until we see pretty much every vault on Morpho turn on the privacy switch?
Well, I mean, in theory, anybody could deploy, a shielded adapter for any vault, for any asset. However, the approach we're taking on the Zama protocol is that we have what we call the registry. The registry is a list of curated tokens, vaults, and protocols that we believe pass the bar in terms of quality, security, integrity, compliance, and so on and so forth. There can be 1,000 different confidential USDC tokens, but we really only need one that everybody is using, and want that one to be, very secure and everything. So I don't think we're going to be listing every vault overnight. I think we're going to want to start with, the very high quality, very, I would say, battle tested vaults first. We want that to be a no brainer for people. We don't want people to have to think about it. Is that like a good vault? No, look, Steakhouse USDC Prime, period. Right? It works. Yep. People use it. We don't have to that's not our job to decide, that the market has voted Steakhouse is awesome. That's it. And that's how we're going to think about it. So rather than having 100 USD vaults, I think we're going to focus on is supporting more currencies. We want people to be able to hold euros confidentially and make money on it. We want people to be able to hold pounds and make money confidentially on it, yen, and so on and so forth. It's really more of the multi-currency thing that is important rather than having 100 USD vaults.
Got it.
But what about other assets, Rand? I mean, a lot of our viewers here, you've got some people in the chat supporting you and talking about Zama, the token, a lot of Ethereum bulls, Hyperliquid bulls, Lighter bulls, Bitcoin bulls. People want these assets in, as close to their native form as possible in a private way. How about the evolution of more speculative assets in a private manner on chain? What does that process look like?
Yeah, if anybody is free to actually make a governance proposal on the DAO and basically say, I'd like you to list, that token as a confidential token, So that is actually technically, that's what we do. When we want to list a token, we actually make a proposal on the DAO. So, we're going through the same process. We have actually a few assets already in there. So, we have confidential USDC, we have confidential USDT, we have confidential Zama, obviously. We have confidential TGBP, which is a GBP stablecoin, a British pound stablecoin, very nice one. And we also actually have confidential gold, XAUT, so Tether Gold. So you can technically already take your Tether Gold, shield it, and just hold it. It's sort of like the modern equivalent of stashing gold under your mattress in a way, right? And there might or there might not be yield opportunities on gold in the future. I can't really comment on that. I'd love to do Bitcoin, but which Bitcoin, right?
Yeah, we need Bitcoin
exactly. What is Bitcoin and Ethereum? I don't know, right?
Yeah. Okay, so there is going to be this process and there's this open kind of, framework to evolve into. You've got the stablecoins, Tether Gold, Zama, a pound stablecoin, and we can get to ETH, we can get to, Morpho token, et cetera, et cetera, et cetera. And so is the right way then to think about Zama's current initiative just to be the kind of confidentiality layer for all of EVM blockchains and all of EVM networks? At some point there should be a Zama confidential version of most of the notable tokens on chain in the future.
Oh yeah, 100%. I think Zama is not a chain. Zama is not trying to be everything. We're trying to be one thing, and that thing is HTTPS for blockchain transactions. Every financial transaction on a public blockchain, whether it's Ethereum or Solana, has to be encrypted with Zama in the future because that's just how finance works, right? That's what we try to do. We try to be the confidentiality layer. And of course, there are, I would say, categories of tokens that we think are going to be driving a lot of the adoption. So stablecoins is obviously, one of those things. RWAs, huge huge opportunity. We announced a partnership with T-Rex a few months ago. You had, Joachim on the show earlier today.
Yep.
Like T-Rex is tokenizing $100 billion of RWAs in the next 12
Huge.
months. I mean,
Insane.
I'll give you one number. If 5% of T-Rex's initial commitment of $100 billion, so 5% gets shielded with Zama, it would make Zama a bigger privacy protocol in terms of value shielded than Zcash. So 5% market share of a single partnership is enough to make Zama the biggest privacy protocol ever. Like, guys, RWAs, I don't think people understand the size of that market. It's trillions.
It's so
literally trillions.
And we're so early. And I love the way that you opened up this article, this blog post around this product announcement with Morpho, because you said, and I'll read it, I guess, word for word here, because you said the Zama protocol made confidential tokens possible on Ethereum. The natural next step is giving them utility. I think everyone is having a very, very similar conclusion and revelation here where they realize, okay, we are now tokenizing all the assets. We're starting with stable coins. We're starting with the high velocity assets. We're doing equities. Then we're going to do real estate. We're going to do the bond market. We're going to do Forex. We're going to do all of these things. All of these things are going to become tokenized. It doesn't just stop there. They end up flowing into these protocols where you can actually do something with it. And some of those assets might be better collateral. Some of them might be better to fractionalize. Some of them might be better as deposits to borrow against or whatnot. And so many of them are applicable for privacy.
Can you imagine, right? I guess just how, honestly, I'd have goosebumps thinking about how big this market is going to be. It's insane. Like RWAs, okay, combined with blockchain composability means that you can actually start to build synthetic derivative assets for anything you can think of, literally by pushing a few lines of code. Do you know how difficult it is in TradFi to actually build like a new financial product by combining a bunch of assets? It's really hard.
Yeah.
We're turning that into code that anybody can be like, you know what, I have an idea. I'm going to take that asset here. I'm going to take this asset here. I'm going to put it together. I'm going to sell that as a new thing. And guess what? That's exactly what curators actually do.
Yep.
And so that's why I'm so bullish on this thing is like, I think we're rediscovering finance on a whole different scale in a completely programmable way. And confidentiality is an obvious requirement for that to even happen.
You're absolutely right, Rand. And we're increasing the velocity of all the assets that already exist, but we're also increasing the velocity of the innovation of creating new things and new assets and new derivatives, which is going to add and grow the entire financial pie. And you and Zama are already a leader in the privacy industry as it relates to this. And so you guys are fighting the good fight. We really, really appreciate you coming on today and sharing some time with us. We realize it's
my pleasure.
A busy day.
As always.
Congrats on the announcement, and thank you for
Big day for the French.
being a great partner here on Privacy Day.
Thank you.
The Power Law is your friend as a leader in the privacy world, and as every asset comes on chain, you guys are in a great position. So thank you so much, and congratulations again.
Thanks for having me. See you guys.
Thanks, Rand.
Thanks, Ryan. We'll see you next time.
Senegal had no chance. They never had a chance. All right, guys. We're going to keep things rolling here on the Privacy Day. We just got the announcement of unchanged rates in the Fed. 9 of 18 FOMC participants pencil in a 2026 rate hike. Remember the bet we placed yesterday around the dissents? We said unchanged rates and no dissents. So, ladies and gentlemen, we've got the unchanged rate. We will see if we get a dissent. Guys, we've got Illia from Near and Josh from zcash coming up next. We'll be right back after a quick break. We're going to keep Privacy Day rolling. Thanks for rocking with us.
money, power, and money, power, and
we get deep, you know we get deep. We get deep, we get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Welcome back to Privacy Day, ladies and gentlemen. If you're rocking with us yesterday, you remember we put the unchanged rate and no dissents play on Kalshi. I do believe that hit according to my quant, Rob.
Next up on the roll-up is Kevin Warsh here to tell us about the state of... No, I'm just kidding. We've got a couple of bangers here coming up. We've got Josh Swihart of ZODL and zkSync, and we've got Illia from Near. These guys are going to tell you everything that you need to know when it comes to zkSync, Near Intense. Pretty epic from Rand. Obviously, great confluence seeing that announcement go live the same day as Privacy Day. Unplanned. A lot of volatility out there in the markets right now. But guys, we're holding
real quick,
strong.
Rob. We've got a tie game right now between Portugal and Congo, and you know, I think there's a case to be made for over 3.5 goals here.
All right, we're sports betting live on the show.
All right, let's get Illia and Josh in the back. Let's get this show started. Privacy Day continues on. Guys, good to have you there in the chat. We got some volatility there on the FOMC as expected. We've got Kevin Walsh speaking in a little bit. We've got Illia and Josh on in the back, ready to come up. Let's bring them up. Let's talk Zcash. Let's talk Near. Let's talk confidential intents. Illia, Josh, guys, welcome back to the show. Good to have you back. Happy Privacy Day. We need to make this a recurring thing.
Every day is Privacy Day.
Yeah. Apparently.
Certainly is.
Apparently.
Certainly is. Go, Andy, please start us off.
Gentlemen,
here.
good. It's great to have you back. I mean, I think at this point in this kind of state of the space, we're very, very clearly moving into a privacy-first mentality. I mean, Illia, you tweeted out that in the near future, you want Near intents just to not even have a on or off switch. It's just always going to be on. Josh, obviously, you know, committing your life's work into ZODL, into making Zcash kind of accessible. And, you know, as we kind of think about these things and the evolution, I would just love to hear each of your guys' perspective as to where we are in this evolution, right? Because public blockchains have been, since the inception of smart contracts in 2015, 2016 with Ethereum, we're about 10 years past then, about 15 years past Bitcoin's era. Just kind of starting really broad here, where do you guys believe we are in the transition from public kind of networks into more privacy first networks, and how you guys, or why you guys believe we are where we are? Josh, would love to hear from you first.
Sure, I think we're at a tipping point. You know, we've been, I mean, many people, many of us have been talking about privacy for a long time, and the public has seemed to be apathetic and saying, you know, who cares? We've already lost our privacy anyway. Like, does it really matter? And now we're seeing the implications of it mattering, and so people really starting to grok or understand what that is. As governments become more authoritarian, they're locking down more things. They want to watch more things. We've had this battle around communications and the ability to protect our communications, and now we're having this battle around money, because digital money's become a thing. So I think it's part of a natural evolution. It needed to mature. The technology needed to mature. I think we're here. It still, to some degree, needs to scale, but that's coming very fast, and I think we'll see much more mass adoption. And in the coming years, I think people now have their eyes open.
Yeah. Illia.
Yeah, I mean, very much agree. I think the only way to do kind of verifiable money payments prior were to make them fully public so everyone can verify. We now have technology to do that, not publicly, and so now we can actually start rolling that out, and we have, and obviously Zcash been pioneering this from a while ago. But if we want this to be used by mass market, by day-to-day, by companies and by agents, like, it needs to be private, right? That's just like, as we move from pure speculation to real value that this technology brings to the world, privacy is effectively like a 0 to 1 feature here.
Yep. And, you know, we've seen how we're getting more and more censorship, you know, across the broad swath, right? Like, we're seeing tax rules being implemented in Illinois today, how you take money from your one pocket, you put it in your other pocket,
oh my gosh,
you get 0.2% tax, just pretty much asset seizure at that point.
Get me out of Chicago, please.
And obviously, we all saw what happened to Anthropic and Mythos, right? The U.S. government was fearful that it was going to fall into the wrong hands, and decided to, you know, put the stops on that as well. And so I think people are realizing that these things are out there. They're not guaranteed access, and there needs to be alternatives. And so Given that we're looking at this, Illia more on the confidential intent side, kind of at the smart contract layer, and ZODL and Zcash more at the asset level or the chain level, I'm curious, we've kind of been having this recurring conversation today. Where should there be privacy implementations? Should it happen at the asset layer? Should it happen at the chain layer? Should it happen at the smart contract layer, a combination of all? Is there design choices that make more sense as far as how we implement this privacy? Because I think we're at the stage, we know that it's a must at this point, it's gaining more adoption, but how exactly should we be implementing privacy mechanisms? Illia, maybe we could start with you and we'll switch to Josh.
Yeah, I mean, I think it needs to be at every layer, right? That's the kind of TLDR. The asset layer is extremely valuable because what Zcash provides is something that you cannot get anywhere else, right? It's really kind of the strongest properties that you can have of both privacy and kind of decentralization of control and governance of the asset itself. And so that is kind of the absolute hedge against any kind of government or even kind of cross-national level operations. As you go up the stack, right, you still need to use these assets, you still need to pay, you still need to transact, you still need to interact. You want to lend, you want to borrow, you want to do all of these operations. That's where you have kind of execution layer. And if you need to then go and kind of unshield, and then if I'm lending and borrowing and everybody sees what my position is, we've seen this on Hyperliquid, right? People getting like hunted to get liquidated for their positions on Hyperliquid. Like that is all kind of extremely detrimental for any normal financial operations. And again, this is where like, if you look at institutions, they've been trading off DEXs. They own centralized exchanges, which don't provide visibility into what's happening. And so if we want, and I think like they want to move fully on chain because it's cheaper, it's faster, it's more access, we need to offer them privacy as well. And same for individual users, right? As I want to pay for my coffee, I don't want everybody to kind of see that this transaction is happening. I don't want to every time. And as we go up the stack to, kind of the way I think of stack as, AI is on the front, blockchain on the back end, and obviously like assets execution. There, you need privacy for AI, right? We've seen obviously censorship now with models. We see the model providers censoring on the other side as well. We see, they can change the rules at any time, saying, hey, cool, we're going to keep your data for whatever purposes we think it's useful. So, if you want to have kind of similar properties with your AI, which I think is going to become the way we interact with computing, the way we interact with blockchain, the way we interact with money is going to be modulated by AI. You need the same properties there. So kind of across the whole stack, right? And that's why, excited to work with Zcash, excited to bring these technologies to mass market.
Yep. And Josh, on your side, given that you've integrated with near intents on the ZODL in the ZODL wallet, I'm curious about that implementation, right? You've got the ability to shield Zcash for private transfers, but then you've also got confidential intents from near. Are these things compatible? Do you get some extra privacy by doing this at both the asset level and the smart contract level? How should we wrap our heads around, what we're giving up in some solutions versus what we're gaining in others?
Yeah, I'll start. Before I get there, I'll start back where Illia started, which is to say, I fully agree. You have to have privacy at the base layer, at the database, at the token level. Otherwise, it doesn't make sense. It gets hacked. It can be seized or it can be censored. It's like traditional systems. Like we've had this kind of front end, middle tier database, and you're saying, okay, we're going to keep the database completely transparent, but we're going to implement privacy or encryption at the kind of these upper layers. It does not work, right? All of the data is there. It's there that can be seen. It can be hacked. People have access to it. If you're using WhatsApp on Facebook or with Facebook, there's somebody that has keys So you can say, okay, it's encrypted between parties, but like somebody has keys. So if somebody wanted to go be able to see transaction data behind the scenes, or they, a government comes in, whatever happens, it just doesn't work. So you do have to have it on all layers of the stack, or you have no privacy guarantees. And the strongest privacy guarantee that you have at that lowest level is zero knowledge, where no information is posted to the chain. It's just a proof that something happened, a mathematical proof that you can trust. So it's not even just encryption, or like you would encrypt a database, that the information just doesn't exist. So if you don't have that, you can't like bolt that in up the stack. It's just a non-starter. And it's not just for security or privacy in the way that we traditionally think. It's about censorship resistance. We have these decentralized systems. And if somebody can see the information, if somebody in power, whether that's a company, a third party that's running in software on top of the data, or that's a government that wants to see it, the only way that it can be censorship resistant is not decentralization, it's privacy. And you really have to have both of those properties in order for that to work. And then you have the stuff that Illia is doing. Like there's people in this world and there's people in this ecosystem that are zero-sum people, and they're like, well, if NEAR is doing something and they're adding confidentiality or they're adding some privacy at some layer in the stack, then does that take away from Zcash? Like it's just bad thinking, right? So we need more and more. We need these applications that are built on top. We need things like confidential intents. We want to be able to transact. I want to be able to do a swap from ZEC to USDC or to something else, and I want to be able to do that confidentially without having a third party or without leaking too much data. Then I can do that with something like near intents, where like Zcash as an asset doesn't have like that kind of capability built in. So as people are adding these layers and capabilities that others be able to want, whether it's swapping or lending or borrowing or those kinds of things, to the extent that they're adding privacy on top and kind of hardening the whole privacy stack, I think is super important.
Yeah. And I think that we actually had Tushar on the show to start off today, and he was talking about privacy as a store of value. And so, I want to ask you guys both this. Like, we think about privacy as like a feature or a capability of a system, right? Rather than as a means of storing value. And I think what NEAR's confidential intents have done has allowed Zcash and other assets to be far more like composable and usable across the on-chain ecosystem while maintaining that private nature. But when you think about the idea of privacy as a store of value, it's not necessarily as much on that meaning of exchange point. It's more around this idea of the value that privacy can bring and in storing that value in a kind of like meta way. And so, I'm curious from both of your perspectives here on this kind of privacy as a store of value conversation. Like, when you think about that, what does that entirely mean as privacy storing value? And maybe you can compare that as to medium of exchange or using these things for private payments like ZEC for payments versus stable coins, and just kind of generally like this privacy as a store of value thesis, what that really means for crypto assets and for investors, users, et cetera, how to kind of wrap our head around that.
I'll jump in. There are a lot of people in the Zcash ecosystem that want to be able to spend ZEC and use it day to day, and there are a lot of people that view it as a store of value. And if you think about how amazing that is where we are today. So traditionally, if you have a store of value, like we go back to old stones or seashells or gold or things like that are hard to divide, hard to move around the globe very quickly. We went to like Swiss bank accounts. You still have a physical location in a jurisdiction where rules may change, and you're not sure if the rules may change, and you've still got to process an intermediary to kind of go through. And now we have this store of value that is completely unseen. It's just a black hole. Only you know what is in that hole and how much is there, that you can tap into at any time without any intermediary telling you you can or you can't. That's completely portable and can be around the world in seconds, right? Like never before in the history of humankind have we had this kind of capability with store of value and protecting our security, our liberties, and what we want to do with it. Now, at some point, you want to be able to exchange it or spend it, right? What is a store value? It's it's the battery, right? I'm storing this up over time, and then I'm going to be able to want to use it at some point. Otherwise, it just doesn't work. Like if I have a gold brick and I want to be able to spend, I want to be able to go buy a bike. I can't go buy a bike with a gold brick. Like I've got to convert it or whatever, and it's very, very complicated. But now we have this store of value where I can easily move it into my counterparty's currency of choice, whatever they want to receive it in. We use near intents in order to be able to make that happen. Or you can do it directly. Somebody else has their own black hole of store value, and you can send it straight across. So infinite capability to store and use your wealth. Whether that becomes, at some point the store value becomes a medium of exchange, or it can become a medium of exchange. So like that dichotomy, I struggle with a little bit, but like I get it. But the store value narrative is very strong.
Yeah. Josh, I think Illia's going to stick with us for a little while. So, and we've only got a few more minutes with you. So I wanted to get into maybe some of the recent developments with Zcash. You guys have, kind of had a little bit of some ups and downs as of recently. And I'm just curious, it is a very difficult, challenging thing to sort of find something, act quickly, probably, stay up a little late on some of these nights and ultimately implement a solution. Which has seemed to be very effective, and fast forward now, getting help from some of these frontier model companies on really tightening things up. I'm just curious, how things have been for you the last few days. Kind of what was going through your mind, and maybe take us through, from here now where we are and where we're going, so that we can sort of maybe fill in any correct any misconceptions, fill in any gaps in the minds of ZODLers.
Yeah, it was a crazy week. From the notification of the vulnerability to the rollout of a soft fork to the rollout of a hard fork over a matter of days, where the team is effectively working around the clock, 24 hours a day. Somebody's up working on something. I think we had days where some of us had 2 hours of sleep, so we were able to kind of get a nap and get back at it. And I think it was handled very well. We have some really good security protocols, and we were very well prepared, and I think executed well. I think the market does what the market does, and there were some questions and that kind of thing. So some people had moved out. I think we saw people moved out of the shielded pool, of the orchard pool specifically, into transparent addresses. Some people, may have sold their holdings. We didn't see a lot of movement, like multi-hop out of the shielded pool as we were kind of watching that into the transparent, into an exchange. So some of it was speculative, and then it kind of bounced pretty nicely. The great thing about it is that like mobilized both our team and teams across crypto to like further harden their protocols. It's like saying like, holy crap, like these AI models are getting really good, and these protocols that have historically had a lot of complexity where it's hand checked, human checked, there might be issues. And so like the hardening that's going on, the formal verification that's going on right now, there'll be a new orchard pool called the Ironwood with the bug addressed and formally verified, plus Mythos has already had a crack at it. There was a friend of the project in Mythos and did not find anything. So there's a hardening, and like people want assuredness, right? They want security. They don't like uncertainty. And so to the extent that this has been hardened the way that it's hardened, as quickly as it has been and as quickly as it will be, it is pretty amazing. And so you can look at like a short-term like price dip over a couple days. It's a blip in time, right? Like we're building for generations to come, and we're accelerating pretty good. So I'm pretty happy with where we are.
Yeah, Illia, on that point, I'm sure you saw the Mythos verification announcement as well. I'm just curious your thoughts when you saw that. What that even means from your kind of AI perspective of like the strongest possible model, kind of like verifying a blockchain security perimeters, and just kind of like what that process looks like, how you reacted to it. is that something that you're interested in doing for near and confidential intents and intents? Just kind of give us your viewpoint from that part of the equation as well.
Yeah, so I mean, right now, effectively, everyone who is building this kind of systems is throwing everything that's available, right? And so obviously Myth is right. I mean, especially now is restricted, but at the time was restricted. So it's really amazing that the team was able to kind of work with the Myth's team there. I mean, the reaction was very much like a ping Zuko to get more context on that. But I think the reality is, and this is, I think, was important part of what Mert was saying kind of when we were discussing this like over a week ago. The actual vulnerability finding usually comes not from just like, hey, misses, or hey, whatever, opus, find vulnerabilities, make no mistakes, right? It's really a kind of crafting effectively attack harnesses for the code. And so I think it's important to recognize that, potentially you can use, new open source model in a more targeted way to find vulnerabilities, right? And I think generally I would be surprised if a lot of hacks that came out in April were used, people used actually the kind of closed source models. It would be very dumb to do that because obviously those logs are stored one way or another. And so I think a lot of it is now using open source models like a lot more effectively. Now, and this week, again, we talked about it. I think there is no, there's the model verifying is always going to be chicken, kind of cat and mouse, catch up game. And so you need form verification, and you need a bit new paradigm on that. This is something we've been working on, where you can really write code formally verified right away. Because I think for any system that stores values, that transacts value, that is kind of mission critical, I think we will need to formally verify it. And so end to end, right? Networking stack needs to be verified, not just code that runs, but also everything under it needs to be verified. And so we need to scale this ASAP. And again, AI is actually a great augment to do that effectively and cheaply. And so that is something that, we will see a lot more progress across the space in the next 3 months.
Yeah, Josh, just on that note, right? Ironwood is going to have that formal verification property kind of embedded into it. It seemingly can't come fast enough. What does that look like for all the Zcash community here today who are listening? What is the roadmap to Ironwood and to Tachyon reasonably look like? And I know you guys are fully locked in here, but when can we expect a formally verified Zcash ledger?
Yeah, the testnet's already up. Formal verification is progressing well. I think everything's progressing is faster maybe than we anticipated. I think there's a lot of coordination as it relates to new software. So for Zcashers, they know there's Zcash which is the legacy consensus node that was, the code fork of Bitcoin. That will be retired as part of this process. And so people that are using that node are going to have to move to a new Rust-based consensus node called ZebraD. And so I actually think that coordination problem is probably the bigger problem. Not problem per se, but it's just a lot of work. So I think our target is mid to late July for Ironwood activation. That's when the current end of service or end of life is for zkSync.
Yeah, and that's when we'll be able to have a clearer view on the amount of Zcash potentially that could have been minted in the orchard pool. Is that correct?
Yeah, what it does is it's going to force people effectively out of the orchard pool into the new pool. So people will be able to maintain their same addresses. So it will feel very clean. They'll walk into a wallet. They'll have an option of either kind of background moving things over, or moving things over manually. Anytime you move things, it leaks data, and so we'll provide some guidance on how to minimize that data leakage. And there's things that are being built into that turnstile, what's called the turnstile, to effectively move that money. Over this next period of time, we're already working with wallet providers and providing guidance on how to do the implementation within their wallets. And then if you choose to, spend notes that are in the Orchard pool today, it's going to spend them into Ironwood notes. So I think, that whole transition should be pretty smooth, and we'll have some dashboard kind of stuff up as well out in the community where people can be able to see and track the movements across these pools.
Got it.
Awesome. And, Illia, just last question from my side is, as, there's soft fork, hard fork, ultimately new pool implemented on the Zcash side, is there anything that you have to do on the Near side to make sure that it's compatible and things run smoothly on, some of the ecosystem enablement protocols that are, in and around Zcash?
Yeah, I mean, there's some work because compared to most other kind of Zcash exchanges, we actually support shielded pool directly. And so you can go directly from in and out of shielded pool. And so, I mean, we obviously will want to support new pool kind of directly and maintain all that. So we'll need to update for that. But otherwise, I think, I mean, as with kind of other chains, just making sure that, as the forks are progressing, we are on the right fork and everything is working correctly. So, monitoring situation and supporting as much as we can. Right. I mean, like the week it was happening, right, we were kind of providing, information about like the flow of value and intents. Like there was actually inflow into Zcash through intents when the price dropped, because there was supporters actually were buying. The people who are on chain were buying. So as price dropped. So yeah, just making sure that all is working and kind of enabled properly.
Awesome.
Love it. Josh, last thing for you. What do you have to say to all those who panic sold their Zcash?
Sorry, people.
Guys,
thanks for coming on, man.
Thanks so much for joining us. Josh, I think we're going to let you go. Obviously, still hard at work, lots to do. Appreciate you joining and fighting the good fight. It feels like a great cohort of speakers here for Privacy Day. Appreciate you coming on.
All right, take care. Thanks, everybody.
Thanks, Josh.
See you next time. Thanks, Josh.
All right, Illia, man.
Then there was one.
Illia, man. What were they thinking banning Fable 5? Like what were they thinking of this outcome, right? I mean, how to shoot yourself in the foot 101.
Yeah, I mean, I think that it's an interesting, like, there's already obviously been a conflict between kind of U.S. government and Anthropic, right? So this is just kind of continuation of this. I think from a U.S. government, this is extremely bad precedent, because effectively what is shown, they can ban any internet technology by U.S. company.
Yeah.
And this means for every single other country, right? Where right now they're relying on, I don't know, Google or browser or maps or something. Like all of that now is effectively under threat, right? Tomorrow they can say, oh, the maps is a strategic information and only available to US citizens. And it's going to disappear for everyone, right?
And one of the things I realized the other day is I was looking at a map and I was kind of planning some travel, and I realized that it said Gulf of America near Florida, but it doesn't do that everywhere.
No, it's only for US, yeah.
Right. So Google and Apple are showing different people different things. There's not really an objective source of truth that we're using. And it feels like another scary, just something to consider here is that it may not be so black and white when it comes to these models. Like some people might get degraded service. We got Fable, but not Mythos. The US government is going to make sure that they get the frontier of the frontier, but there might be AI that is showing some people a certain version of the truth and other people a certain version of the truth. And some of the people are going to get more truth. Like, it feels fundamentally, it's very confusing. It's very complex. I mean, does it have to be this way, Illia, or is there a way that we can get around this?
No, I mean, we need to get around this and what Web3 been building. But I do want to note that this actually been like this even before AI, right? Google is showing you different results depending on where you are for the same results, right? There is countries who are enforcing things that should not be visible in search results. And I'm not talking about China. I'm talking about, Western Europe and European countries. And so the reality is, like, for any centralized provider, like, they will be by definition one way or another complying with whatever the kind of regulation and policy. And I wouldn't say that countries have been moving toward a more open information flow generally, right? Across the board. And so I think Web3 has been building for this exact goal. And so for AI specifically, you need, kind of decentralized compute. You need private inference, so you are not kind of subject to this. Again, similarly how with money, you need privacy as a method to have, to be kind of uncensored. Same for AI, right? Privacy is enabling to be uncensored because now, like, I call it store, like, you were mentioning store of value. I wanted to say it's store of freedom, right?
Yeah, that's what I was trying to get at. Yeah.
So when you use AI that's like truly private and you don't have this like overhang. Like right now, if I'm asking something to ChatGPT, I need to think about if I'm going to ask something that'll trigger their understanding that I'm doing something wrong. Right?
Yes.
Yeah. Like I'm like, hey, a friend of mine is doing like mRNA company. I want to know more about mRNA. Am I going to get banned for like asking questions about how molecules are affecting DNA? Because like this is also the same thing that you do for bioweapons. Like, is this going to be a problem, right? And I know like a couple of people who actually been banned from OpenAI, for example, for asking like questions about nuclear power. So like
it's crazy.
The reality is, yeah, like the freedom of like using technology that is private and decentralized is you don't need to have this mental overhead of, am I going to do something wrong? And you can just ask it, you can get the results. The model may still be like, whatever, fine-tuned to not answer some questions, but at least like you don't have this overhang. And then obviously for models themselves, we do need models that are actually trained kind of more by effectively community versus by a single company. Because right now, so my like there's like two sides of things. I actually think trying to align to kind of a general goodness of humanity is an impossible task, because the humanity is not aligned, right? Every country, every city, we have two parties. Within a party, like at every level, we have misalignment, right? And that's kind of what makes us human, right? Everybody kind of has their own perspective, and so I think the only alignment that's possible is with the individual, right? So you can have, that's why we call it user-owned AI. It's like it's aligned with you, it's private for you, it has like your interests in mind.
Yeah.
Right now, if you're consuming AI from a company, it has companies' interests in mind by definition.
Right.
Right. And so that's kind of really the conceptual transition. And then we need to build better products that actually surface that, right? Because you can, do financial transactions, healthcare, and all of these things, and not worry about where is this going to go and what's going to hack and what's going to be disabled tomorrow.
Yeah. Illia, we're going to bring Jordan up from Venice and continue the conversation. We're just going to keep flowing right into it. We're going to bring him up now and just keep it going here. So give us 1 sec here. Let's bring Jordan up here now. And Jordan, so welcome to the show. Thanks for being here. I know we, kind of last minute, but good to have you. You have an amazing setup. We're literally just talking about this ban, and Illia kind of just talked to us a bit there about kind of what happened, why it sets a terrible precedent, and really just about like structuring the future of AI with this kind of like altruistic perspective. It's quite difficult to kind of satisfy all parties, but there is an answer. There is a worry of the types of queries that users put in that lead them to a ban from some of these frontier models. Obviously, Venice is kind of has this uncensorable, unbannable kind of feature set. Man, just kind of giving you a chance here to come in here hot from Venice's perspective. Man, what the hell happened with the Anthropic Fable 5 ban? And how do you react to this?
Well, I think the Anthropic Fable 5 ban, or rather the government's attempting to ban it, is indicative of just the nature of these centralized locations, I guess we'd say, where we get our intelligence from and who these companies are beholden to and the rules they must follow. So in this case, I believe it was foreign nationals were supposed to be banned from using Fable 5, and because they couldn't actually enforce who's using it, they just put the global kill switch on. And this, I think, sets a precedent because what happens next? And who's banned next, right? This isn't even about what you did or what you prompted. It's just, well, if you're not from a certain country, or it's who you are that is actually being blocked from using this technology, from accessing the intelligence. So at Venice, it's really important to have unrestricted access to intelligence, whether that is censored, uncensored, whichever model you choose. So the frontier level intelligence, frontier open source intelligence, which is catching up swiftly. And it's really important for Venice to offer permissionless access to this intelligence to all humans and agents. And that's what it was designed for, this moment where censorship comes in. It's probably not full force yet, but I do believe we will be seeing it in the not so distant future. And Venice is ready. Venice is ready to embrace people searching for more freedom when it comes to AI and being able to access this intelligence.
Yeah, and Jordan, I just wanted to piggyback off that on the kind of nuts and bolts here. I think people are, kind of trying to understand how Venice works, and a lot of the privacy features from the inference level, Illia and team here have been working on for quite a while on the inference level specifically. I know there's a kind of a private set and an anonymous set. We're active users of Venice here. Maybe you could just explain a bit about the private inference side of things, why that's so valuable to the core value prop of Venice, and just, some of the work that you're doing with Near, and just generally how you're thinking about that private inference capability.
Sure. Well, as you may or may not know, Venice offers access to all levels of models. So you can access frontier models, and Venice almost acts like a VPN. It shields your identity to these frontier models. But sometimes you don't want any of your prompts stored, because in the background, obviously Anthropic, OpenAI, Google, they're storing all your conversation data, even if they don't know it's you. So then what Venice does is it provides access to all kinds of open source models. So GLM 5.2 just came out. We have Kimi K2.7 code, Gemma 4, all the top of the line open source models. And Venice hosts them and does not store any of your data, and has zero data retention agreements with any background infrastructure going on there. So there's contractual obligations here that nothing is stored anywhere. And then a step further is that there are certain models you can access completely end-to-end encrypted, where your conversations are run in a trusted execution environment, in which case you can have the most confidence. You can get the attestation reports of the encryption, all the details there, for those that like to verify and not simply trust. And so Venice, with a single API key or on one single interface, you can have full workflows to go through the different brands of intelligence you might need for certain use cases, which I think makes it a very compelling product. I know for me personally, I have things I build for professional purposes. I'm not terribly concerned about privacy. I want performance. I want the best possible intelligence, like Fable 5. But then in other cases, for more personal use cases in my home life, for example, I want privacy. I don't want anyone storing these conversations, but I want to still be able to harness artificial intelligence to enhance my life, in which case Venice is the perfect solution for me, because I can actually alternate between different models to see which one serves my purposes the best, see which has the cost performance ratio, what works the best for me, and we offer that to every customer, human and agent.
Incredible. Guys, I think there's like this trajectory that we're heading on where, we are somewhat at risk of the government institutions handicapping these frontier models. We've seen that happen already. We can anticipate that it might happen in the future. And there's a couple of different ways in which we can get around this. We know that, we have open source models, some of which may be distilling these frontier models, and those are probably going to offer the similar levels of intelligence, maybe 1%, couple of percentiles, less intelligent, but at a order of magnitude more affordable cost. Those models are seemingly going to become more prevalent. The other aspect here is this orchestration, and I'm curious how you guys are thinking about this, right? If we have almost an aggregator of models, and I think Venice and Near are both in a position where it's almost like a portal into accessing some of these models. We have the ability to coordinate models together, and that could be for reducing token consumption. Something is good, we can go send that for a particular task rather than sending it to the most expensive model, or for really combining the strengths of these models together for like really, really great intelligence. And we've seen some of the markups, the benchmarks from Open Router and these kinds of things that show how powerful the combination of these models are. Is there a particular aspect of this that each of you are focused on? Illia, maybe we can start with you. How is Near thinking about itself as not a hyperscaler like trader of the creator of these models, but as you're thinking about access to these models and orchestrating, coordinating these models together, either for token consumption or powerful intelligence, how are you thinking about providing the most robust solution while also keeping in mind that these things could get censored? We have open source at our disposal. What is your broad thesis around orchestration of these models?
Yeah, so I mean, my thesis in general is the AI is going to be the new operating system, and at the same time, indeed, you don't want to use the most expensive model for ordering the lunch, and so you do need an intelligent routing, and you do need all of these components. And so the way I think of this as we need the agentic operating system that is actually doing all of this work and maintaining context and is able to execute actions on background and is able to, leverage whatever the kind of optimal solution is for a specific request. And so that's really what we're doing with Ironclaw, right? We kind of think of this as this like on a harness level, you can do the aggregation, you can use maybe batch API. So for example, if you're running something on the background to do like news aggregation, you don't really need real-time APIs, which is what kind of all of the current API offerings are. You're actually okay with maybe waiting 10 seconds, 20 seconds to get scheduled, and then you can be way cheaper because you're filling in so-called bubbles. You're filling in gaps in the compute utilization of the hardware in the backend. And so you can do a lot more kind of broader optimization when you have this kind of a solution operating system on top. So that's kind of how I think about it. Then you can think from use cases, then you can think from costs, and you can benchmark the whole system as well, how well it does on everything from day-to-day life to coding to using computer to like all of these tasks, including security itself, right? And so that's really what we've been focusing on with Attack Bench and other benchmarking as well.
And then Illia, just real quick before we get to Jordan, on the cost side, the economic side, how do you think about the trade-off between the cost of the closed source version of these really, really high performance models versus the, let's say, for lack of a better term, Chinese open source version that is just as close, almost as good, but at, a 20th of the cost? How do you think about kind of like maximizing your token spend?
Yeah, so generally for, by default, we route everyone to the kind of cheaper model. I mean, DeepSeek Flash right now is extremely good for general use cases. The V4, it's super, super cheap with cash tokens as well. And it allows you to get a lot of the general stuff, and then your agent can bump it up. We also have like LLM console, for example, is just a skill in Ironclaw. right? So if you do need like, hey, I have my medical analysis and I really want to make sure that this is, I want second, third, and fourth opinion, right? Then you just slash LLM console and boom, you're spinning up, Opus and GPT-5.5 and Gemini like all together on the same request and then consolidating it, right? So you have all of these things actually like at your fingertips, and yeah, you have privacy for general use. All your context is private as well. All the background processing, memory, everything done on kind of private inference, and then when you do need, you kind of bump it up to maybe more kind of like that, few more percentages when you really need that, for coding planning, for medical, like high analysis, etc. And then you use those models, and indeed they're effectively VPN'd for you, but some of that context stays. We also have an anonymizer running, so when you route to these centralized providers, all your like name, phone number, emails, and like other critical PII information gets removed and then re-added back when it's feeding back.
Awesome. And Jordan, same question to you. How are you thinking about model orchestration? How important is it to optimize token consumption? And given Venice's position and in the market, do you think it is in a unique position where it can serve as this model orchestration layer to combine the best of all these models?
Yes. Well, first off, Venice has been cooking something that I'm not sure how much I'm allowed to indulge, but it is directly related to model orchestration and creating workflows that might mix and match through different models depending on what the end goal is and the actual use case. And these will be workflows that users can submit. And I won't say any more about that, but even now we just recently released the agentic chat. And if you use the agentic chat, you'll see how you can choose the base model for the agent, and then depending on what you tell it to do, it will then route to different, for example, if you want to generate an image, edit an image, generate a video, it'll route to the appropriate model. So imagine that, but you use a frontier beast model like Opus 4.8, for example, for planning something, creating the documentation for what this is going to be and how it's going to be built. And then you can mix and match, like say, okay, there's a little bit of coding here, there's a little bit of writing, like copywriting perhaps, there's some design. And imagine you can just choose which model gets popped in for each of those, whether that's for cost efficiency purposes, whether that's for performance reasons, et cetera, et cetera. So yes, Venice is in a great position for that type of model orchestration because it offers all these models. And it is in the process of making this much more widely available to the average person. I think, as Illia mentioned, model routing itself is really powerful, but it can also be really tricky. And it's kind of a code that, I mean, me personally, I've been trying to crack for many months, is getting my agent, my local home agent, to route this way when it's a private topic, route this way when it's a building topic, et cetera. And it's just tricky. In general, it's just tricky, even when you really know what you're doing. So our goal is to make this accessible and easy for everyone on the Venice interface. So I think people can really express their creativity. I think there's a real creativity that comes from being able to orchestrate AI agents to do things for us in ways that we've never really experienced before as humans. And so that definitely is a big part of what Venice wants to offer people. It's not just access to the intelligence, but the opportunity to really express themselves without needing to self-censor.
Yeah. I think this is one of the things that people are thinking about most, right? They're thinking about token consumption, and therefore they're thinking about model optimization, and orchestration is a great way to do that. Near and Venice are both at a unique vantage point in the market where we're serving the most amount of the models from all across the board to end users. Circling back to privacy, this is the other thing that people are thinking about most. How much are the frontier, like if I go to OpenAI or if I go to ChatGPT or Grok or Claude, what is their current policy? Just for the sake of user education, because I'm honestly not too familiar myself, what is ChatGPT, Claude's, Grok's, what is their policy right now on how they're using data? Because like, if our imagination runs wild, like I can foresee a very dystopian thing where ChatGPT is sending my data, they're storing it. If someone wants to advertise to people that drink coffee, like they're going to hit me with some propaganda and I'm not going to know anything. And they actually, I remember Sam Altman said something like, these are just going to be diffused naturally into the responses. You may not even know that an ad is in there. Isn't that nice? You're not going to have to watch. It's like, no, like you're literally brainwashing me. So are they doing that right now? Or is this sort of this dystopian thing that we're just kind of imagining?
I'll take that first, I guess. I think it was announced not too long ago that OpenAI was going to start injecting ads into conversations. I am not a ChatGPT user, so I'm not sure what happened there. But I'm pretty sure it's safe to assume, just like with any big tech product, that your data is being stored, it's being processed, it's being harvested, sold to the highest bidder, and probably many others in many ways, shapes, and forms. I think it's not just about, hey, you're a coffee drinker, here's an ad, but it's also the psychological profile of you it's making by how you respond to things, how you answer, your own personality in response to the agent, to the model, really, to the intelligence. And then what these companies are doing in the background, which we can only imagine. We really have no idea what they're doing in the back underneath everything. And so I think even like with this Anthropic ban, I think it was an eye-opener for people. Like, wow, I can just get rugged. Like Fable was, I don't know if anyone used it here, but I used it for just like 2 days and I was blown away with what I was able to build with it. It was so impressive. And then it disappeared. And so to think, wow, I just lost all those capabilities because I was essentially renting this product that's not mine. There's nothing I can control over it. It makes us realize, oh, we really want to have as much ownership and sovereignty as we can over this technology and in the ways that's available to us. So for some people, they're able to run local models because they have powerful hardware at home. Others, it makes more sense to call an API, make an API request via Venice, because it can be private, end-to-end encrypted, et cetera. So I think you never know what they're doing in the background there. There's advertisements. I don't know if I've ever seen an advertisement in like Claude Code. I think I'm more of a Claude Code user than anything, and I know that it wants me to keep consuming tokens. I noticed that. But as far as an actual advertisement and things like that in the personal realm, I've never really chosen to give any information like that to these chatbots because who knows where it's headed. I think advertisements is just the tip of the iceberg.
Illia, you laugh at that, but is that something that you've experienced, that just this consistent desire to keep consuming tokens?
Yeah, I mean, I think it's like there is now product optimization that people started to do, right? Because, if you're, like, this is an example I use, like, from days at Google. Like, you as a individual, as a team, get rewarded based on, launching something that generates more money for the company. And so you're naturally, like, you're literally A/B testing when you're launching something. Hey, did it get a lift in revenue? And so, like, adding things that are like, oh, for example, follow-up questions in a chat, right? Get people to use more. Spend more time, use more tokens, consume more, right? So like all of these things is just like people just keep tagging them along because they drive your metrics, which like in turn drives the company revenue. So I think like it's important indeed that incentives drive everything around us, and those incentives are very much making those companies kind of more money. I think like, I mean, the general in terms of service, I was actually just checking the ChatGPT, right, is obviously they can use all your data for training right now. That's what it says. And you can opt out, but they still store all of your data, right? And so it still may or may not be used. And obviously there's no like, it's not open source, so you cannot like verify that this claim is true, that it's not used anywhere. Yeah. But I agree that like the ads is a very natural extension, and because it's embedded into the very personal UI, I think a lot of people trust this kind of chat conversational interface a lot more than they would trust like even Google to some extent, because Google is more like, hey, here's a list of things, and by the way, here's some ads, right? So like it's kind of more like an inventory of things. And chat feels like you're talking to a friend who is like recommending you things, right? And so it's a lot more conducive. I mean, I've repeatedly said that if somebody wants to sway an election now, the easiest thing to do is to put it into a system prompt of one of these products that's used by almost 1 billion people, and it will be like a very subtle, as you're talking about something else, it will start like kind of adjusting your worldview on this. Like these models are really good at like cacophony and kind of like this slight manipulation. Like we've seen people going, crazy because of this. So I do think it's pretty, I mean, for the future of kind of people, especially people who want to be sovereign, who want to, have critical thinking, it will be critical to use something that, there is no like injected middleman between you and the weights. And even the weights, right, are a problem themselves. So we'll need to figure out how to train models that, we know what goes in, right? We need the organic, community grown models where we know what went in, and then you can leverage that in your confidential inference where you can like inspect the system prompt. You can inspect, like one of the things in Ironclaw, we have a debug mode. You turn it on, you actually see literally the whole system prompt, context, memory, everything that it done, all the actions. Like it's a bit overwhelming for people who are not using it, but you can literally inspect like what actually hits the metal, what comes back, right? Versus like a lot of stuff is hidden in these products usually because like there is a lot of like, and people like show how to query it out, like how to get this, but like they hide it because it's kind of part of their product offering. But I think, like really making sure it's easy, visible, inspectable, end-to-end verifiable what you're using is critical for effectively future of, honestly, society.
Yeah. Gentlemen, to each of you, keep fighting the good fight. Open source, private, anonymous, inference, training data, the entire stack. Thanks for joining us on Privacy Day here today. It's been an absolute pleasure, and wish you the best of luck, Jordan, in your model orchestration for your home agent. And Illia, keep fighting the good fight, guys. Thank you.
Thank you.
Thanks for having us.
See you next time, guys.
Cheers, guys.
Thanks so much.
Alrighty, Rob. Every time I leave these conversations, I'm like, man, I need to work on my models. I need to have better agents. Like I just have one open claw and like get my iron claw set up. I need to just do more. So
I think that's where we're at, man. I think we can do so much these days with these models. I'm also very excited. I mean, you heard Venice. You heard Jordan talk about some new things coming out of Venice, model orchestration. Yeah. I think that is huge, so huge. It's effectively the cross-chain composability in DeFi, but applied to AI.
For AI, yep. It's beautiful, actually.
It's also like, we like to talk about how blockchains are really great mechanisms for coordination, just coordination in general, like coordinate financial activity, coordinate consensus. It makes sense that you could coordinate agents intelligence on blockchains as well, just because you could have different agents as validators, right? So and I think this is what I'd like to see Hyperliquid do with their HIP-4 sort of prediction market vibes. Like to have a market resolution mechanism where you have a different model as independent validators and you try to reach consensus. To me, that would make a lot of sense for a potential oracle or market resolution mechanism.
Yeah.
Or also just generally for like
agents as validators.
Yeah, agents as validators for a chain.
I love it.
And I think it would work.
Guys,
for
we've got John Woods. Sorry.
John Woods joining us.
He's coming up. Privacy is a human right on the hat. We had press conference with Fed Chair Warsh. I believe he's still answering questions as we speak. another 20 or so minutes. We did get a bounce and a dump, another bounce. We just need him to get the hell off of the stage and let the boys have some fun. Let's get John Woods up here, the CEO of Nillion, talk about what he's doing with AI. John Woods, privacy is a human right. What's going on,
Hey,
man?
how's it going? Thanks for having me. How are you guys?
Doing great, man. That is quite the hat. It's Privacy Day here on the Rollup.
Privacy is a human right, baby.
There we go.
Yeah, man. I mean, come on. All of what's happened the last several years, privacy is kind of coming to the forefront as a human need, as a right. John, just give us a sense of your ideology a bit as we kick off here. Why do you feel so strongly about this?
Yeah, when I started off in my career caring about privacy, it was more like, hey, isn't it cool we can use mathematics to send secret messages to people? Isn't it cool that we can have conversations not everyone is party to, because that's an important thing. That's why we have homes with doors and fucking windows we can close, right? And I think it's moved away from that. So, that was where, I started off with the love of the idea. But, I've been involved in a number of different privacy projects, currently Nillion, but I've worked in the Monero community before. And I've worked on privacy enhancing technologies across a number of cryptocurrencies, including Algorand and Cardano. And what I would say is I think that financial privacy is critical. Data privacy is critical. And I think, without getting too political, I think we can all see across, the landscape of the macro right now, just how much civil liberty is being eroded and people's essentially private lives are being interfered with. And there's an attack or an assault on, and I think not just in the UK, but in the EU, less so in the US at the moment, but there's a general attack on privacy. And I think the only way we can stand up to it is by normalizing privacy and not having it be something for sexual deviants and criminals, because it's not, right?
Yeah, I mean, that's a crazy analog, but I agree. But I've asked a couple people this today, and I feel like privacy has a stated belief problem where humans state their desire to have privacy, but their actions don't always align with privacy. Like they often choose to upload their information to public social networks. They, do transactions on public blockchains. They do all these things. How do you think about converging the stated belief versus the actual human action on chain, just in general? How do you kind of balance that and bring that together and reconcile the stated belief versus the actions of human beings?
Yeah, sure, absolutely. And by the way, it's a salient point, and you're quite right. Most people do, I say, spray their bits, their ones and zeros of their life around the internet without care, whether that's pictures of themselves and their family, their children on Google Photos, or whether it's something a little bit worse, like, the fact that your Gmail account basically knows everything about you, right? And it's not encrypted. I think that people do this. It's a trade-off, right? It's a trade-off of an easy life, the comfort and the less hassle that comes with the fact that all the information you need is available immediately, and it can be processed and presented to you at the right time. And so privacy, of course, can add friction when you layer on hard privacy around these services. They don't all talk to each other so easy, and you got to dig for the email rather than having it just surface in your calendar or whatever. But I think what we have to do is try to normalize that. I think that human behavior that you mentioned, and I think it's absolutely true, typically changes after people have been compromised or violated. Okay, so I can tell you. I mean, think of all these there's been many leaks. Many celebrities have had their private data exposed, etc. I bet you, for those people who've been sadly affected by those things, the first thing that they did after they regained control of their accounts was to enable 2FA, turn on passkeys, put down the harder security. And so unfortunately, it's probably a thing in human nature, which is like, once bitten, twice shy, and you kind of got to wait until you've been hurt by these things before you actually take action. But I would like to think, so that not everyone has to learn that lesson so explicitly, it's probably the endeavor should be for technical people and people who are building products to layer this stuff in by default, so that people can benefit from it as much as possible, just like we do with many other aspects of our design these days.
Yeah. Do you think that we've been sort of bitten like more as of recently? And because it really does feel as if there's been this resurgence around privacy and sovereignty, and we're seeing the likes of, a lot of these things become instantiated into our technology and our software. People like the privacy assets at this point in time. And it feels like it's got this cyclical nature to it where it does ebb and flow and it comes and goes. Have we been kind of bitten by the privacy bug more as of recently? Or do you think that we are now empowered, and we're empowered by AI, we're powered by technology, the permissionlessness of this industry, and we never really had the chance to take this into our own hands and do something about it. We've always been bitten by it, but we never really had the opportunity to do something about it. Do you think it's one or the other, maybe both? How do you think this squares up? And I'm just curious. Yeah, maybe we'll start there. We can go from there.
Yeah, so I think it's interesting. The industry at large, certainly I've been working in, quote unquote crypto, right, for the last decade or so, across a number of kind of projects in the top 50. And I think when I was working at those projects, there wasn't really a heavy push into privacy. I mean, it was a niche thing that sat at the side and people were working on it. Even on Ethereum, Vitalik might have talked about it, or there was a small project that might roll some zk circuit on smart contracts to try to, do confidential transfers. You might see Solana do confidential transfers, but typically it was always an afterthought. And I have noticed, absolutely, as someone who's been part of the Monero community since maybe 2015, I guess, so super early. That started around 2014. I've always cared about it ideologically, but I have seen as of late, and with Zcash as well, a huge push around this idea of understanding how important financial transaction privacy is. At Nillion, we're a layer up from that. We're working on essentially encrypted markets, not down at the transactional level. But I do see beyond the kind of, I know there's a lot of shilling at the moment in the crypto ecosystem around privacy being the last 10x. I've seen lots and lots of people say that sentence. I believe it, right? That's why I hold privacy coins and have held them for 10 years. I'm due my payout. but like, I do think that there's something there. But I think it's not just like people on Twitter or X pumping this thing or shilling the notion of privacy. I have this feeling that the genesis of the movement is twofold. Number one, it's a little bit a pushback into the cypherpunk movement of what Bitcoin and cryptocurrencies were started for. I think we lost our way a little bit, not to sound too like nerdy about it, but the Bitcoin, it ended up being like, Michael Saylor and ETFs and funds and BlackRock. And as cool as that is for number go up, and we all want number go up, it's not cool for the kind of like carving fuck the banks into the Genesis block, right? And so there's a little bit of a push around returning to the cypherpunk roots that in the crypto industry. I think that's number one. And number two, I think that it goes back to what I mentioned earlier about the macro. Like, we're living in a time where it feels a bit icky. Like, we're having our civil liberties eroded, and like cryptography and privacy is not the answer to every single one of these things that we face around the world, but it does put a shield around certain things. It does stop people interfering with you to a large degree, and I think that's part of it.
Yeah, man. I mean, we just saw the UK government put out some insane things about social media, about finance. We saw the EU's banning Binance or removing Binance's licenses in a push to create a euro dollar thing, euro stablecoin. Today, we saw the governor of Illinois try to put taxes on sending transactions from your individual wallets. It's just like, and this is not happening in like, developing countries. This is like America and UK and Europe.
Right. And like, if you look at the countries that are doing this kind of thing, it's like, North Korea, Turkmenistan, Southern Belarus. Like, it's typically not the places you go on holidays with your girlfriend, right? And we're seeing this from what we would have thought of as democratic, Western countries. And look, here's the thing. It maybe is better for 15-year-old kids not to have access to TikTok. I don't know. But what I do think is that it's a parent's choice, and it shouldn't be Daddy Starmer who tells us what to do. Yeah,
that's absolutely the case. I I'm curious a little bit more about how the privacy solution works. Maybe just on a more technical note, we've heard, from several of the developers, not quite developers, but teams here today developing privacy. Some of them are doing so at the asset layer. Actually building new token standards with T-Rex. They're tokenizing tons of assets, building in privacy, but building it in with an ERC token standard. We had Near, we had Canton, at the smart contract level, then at the base level, right? And building in, privacy into certain elements of the stack. How does Nillion implement privacy, and where does it implement privacy in the, broad scheme of the way in which we have this set up?
Cool. Yeah, thanks. So super quick answer is Nillion, the token, is just an ERC20 token. It lives on Ethereum. We have our own L2, but it's vanilla in that sense. There's no transactional privacy around the token. The token is used to pay for the privacy services. And so what are the privacy services? They are right now private compute and private data storage. And so you use the Nillion token to pay for those things. And we can do, we call it the blind computer, but basically a big privacy hardware stack. We leverage a smorgasbord of crypto. So there's some trusted execution environments, or TEEs, in there. There's some multi-party computation in there. There's some homomorphic encryption in there. There's Shamir in there. There's the usual signatures, symmetric, asymmetric cryptography. So we got all that rolled into a kind of a ball. And then we have, sitting on top of that, a decentralized network of people who essentially verify the integrity of the privacy continuously, and that's our coin is staked to do that. And so together you have this platform with which you can essentially do private inference of LLMs. You can take Gemma 4, you can take GPT OSS 120 billion, you can take fairly chunky models, 70, 80, 90 gigabyte models with billions of parameters, 8-bit quantization, something like that, maybe 6-bit sometimes depending on the size of the model. Stick them in one of our TEs, Venice style, and do private inference. But we also do, hey, I have this file, I want it sharded, encrypted, and split across MPC. Hey, I want to, run this Docker image, but I need to be computationally assured or cryptographically assured it's running privately. And I think it's cool. I would say, we've done some really cool things. And actually, one last thing, we're working on this financial product at the moment around the encrypted market space, where we're going to be bringing, I hope, legal approval pending. Essentially, I think the first purely trustless atomic Monero swap. So the ability to swap from Bitcoin and Ethereum into Monero in a genuinely trustless way. Not in a Havana Redo, oh shit, I've been defrauded again, but in a genuinely trustless way. Okay, so that's what I'm excited about. I would say we're not perfect though, and so there's lots of work to do. And so where's Nillion in 3 years? It's using less TEEs. They're a bit icky. I don't love them. I mean, they work, but it's hardware, and hardware doesn't scale. And you can't decentralize a network that requires non-commodity hardware. If everyone's got to have a special card, how can I roll that out to the world? I can't really, okay? There's parts that we've decentralized, but that bit we haven't. And so what we're working on now, in the simplest, in a sentence, is basically the idea of running the Linux kernel, okay? Basically the base for all computers around the world, or all servers around the world, inside a fully homomorphic context. So you basically have this private, decentralized global computer that you can fire problems out into, and they get computed on privately and then sent back. But that's not there yet. I don't want to talk about things that we haven't built, but that's where we're trying to get to. So yeah, pretty cool.
Wow. And do you think that there's going to be material adoption for entrepreneurs to come in and build private AI solutions? Like, is that going to be a very well-funded category in your view?
It's a really interesting question. There's two aspects to this. The first aspect is, do we get to the place where we move? Maybe I'll just say first, there was frontier models, and there's the kind of open weights models that you can run on your own computer if it's big enough, right? The frontier models, we don't have the weights, we don't have the secret sauce. That's the ChatGPTs, etc. And then you look at something like GLM 5.2 released today. Apparently, it's the third best performing model in the world, and anyone can download it. Now you have to have a Mac Mini with 512 gigabytes of RAM to run the thing. It's going to cost you like $16,000 for the computer, but you can run the thing on a Mac Studio, not a Mac Mini. So the question is, do open weight models become the standard? I personally think that they will. I think that these open weight models, the kind of open source, if you like, quote unquote, released models, and there's lots of these, Gemma, Quen, GPT OSS, GLM, there's many others, Kimi K2, DeepSeek. will they end up being as good or better than the ones by Claude and OpenAI, etc., or Anthropic? I think over time, yes, they will approach parity. Then the next question becomes, if that is the case, the democratization and liberation of those models becomes really important, because right now, if I ask OpenAI a question and it doesn't fit with Sam Altman's outlook and bias and political stance, it'll give me an answer that basically scolds me like a parent. Whereas if you look at some of these open weight models, they're typically more truth-seeking. Now, sure, if you ask DeepSeek about TNM and Square, it's not going to give you an honest answer, right? Because it's built by the Chinese. But there is typically more truth-seeking in it, and I feel like you want to get away from corporations tilting the bias on the information you receive and trying to be, using a model that's maximally truth-seeking or truth-finding, and they're going to be the open weight models. Then the next big thing is, do we get to a place where we can basically use Byzantine fault-tolerant networks, that's like the Bitcoin consensus, some type of consensus mechanism, to train and to execute inference, or to use these models, to both ask them questions and to make them smart. And so does that become a crowdsourced thing that we can all contribute and then use, the models as much as we've contributed? And we basically democratize and make egalitarian access to these unbiased models. That's the view of the world that I'd like to get to. Like, don't get me wrong, I've got Claude open right here. I prepped for this interview with it. Like, it's not bad, but like a cleaner world, though, is as I've described.
And
John,
I just can't help but think that. And John, before you joined, we were talking about like the open source nature of these things and how blockchains are great at coordinating actors, market participants, generating consensus. I can't help but think that there is this funding mechanism or this monetization mechanism where all, like you're talking about, the crowdsourcing or the decentralized contribution of intelligence to a network, using that as the model and all of us reaping the rewards of our contributions.
Right.
A blockchain would make the most sense to do exactly that.
Precisely. And by the way, there's one or two companies out there, a pal of mine is leading one, called Plurus, and what they're doing basically is they are writing white papers that describe that this is possible, that it's possible to train a model, okay, in such a way that even if one bad actor or n number of bad actors, say 20% of the network is bad and they're injecting bad false truths into the model, whatever it is, that you can weed that out and not have the overall model affected by it. So just like with Bitcoin, you can have a load of bad actors trying to hack the thing and it's robust. If we can get model training to the same place that everyone can help out, and if there's a few, and if the sub-majority, so like minority, not sub-majority, what the hell is that? If the minority are evil and the majority are good or honest, then we end up with an honest model, and that's a very powerful idea,
Yep,
John, I wish you the best as you continue to push this idea of privacy globally. We need it. We need it. And someone's got to invest. Someone's got to raise capital. Someone's got to build this. You're doing it with Nillion, and it's a human right, man. It really is.
Thank you so much. And look, if anyone wants to chat more, I'm at John Allen Woods on X, and Nillion is at Nillion. Thanks so much for having me, boys.
Absolutely,
Cheers, John.
We'll see you next time. Thanks, man.
It's a pleasure. Alrighty, Rob. What happened to this Fed share? Just kind of threw a wrench in my afternoon euphoria. It's pretty upsetting. We've got Omar from zkSync joining us, guys, to wrap up Privacy Day. It's been a marathon, 3.5 hours. Guys are grinding. I think Atan just put in a food order and he called it the nuts. So
W's in the shot.
We
got
guys, if you're
Omar.
still here, Freedom Guy, what's going on? Alan Branch, outstanding podcast. Thank you. Hot Protocol.
We're going to bring Omar
Super.
up in a sec to round out.
I feel like I'm an
Privacy
idiot.
Day.
I was watching yesterday's stream. Think it was the current stream. LOL. Yikes.
Yeah.
All right,
the
let's
chat
get
is
Omar up
fired
here.
up.
Let's get Omar up here. Let's not talk about Kevin Warsh. All my homies hate Kevin Warsh. Omar, what's going on, man? Good to have you on.
How's it going, guys?
Good, man.
To be
It's
back.
Privacy Day.
It's Privacy Day. Did we all just
Yes, sir.
turn off our cameras though? Exactly, right?
Full anonymous mode. I mean, you look like you've been talking to some institutions, man.
No,
That's
this
what
is
you
how
look like
I
you've been
generally
doing.
dress when it's nice and sunny out in New York, you know?
Yeah, it's a beautiful day.
Yeah, no more t-shirts, just collars only.
Yes, sir.
Oh, yeah.
Yes, sir, man. Well, we've seen quite the adoption lately from privacy in terms of an idea, in terms of a narrative. Obviously, zero knowledge technology, zkSync, it's been kind of like not like a tangential kind of side effect, but it's a nice property of zero knowledge technology. I know you guys have been doing a lot of work with the kind of banking side, the institutional side, kind of looking to onboard them into their own Providiums. So I think it's a pretty timely conversation for understanding like what these guys are looking for when they're building with zkSync, when they're launching their own chain, when they're doing business on chain. Obviously, it's Privacy Day, so I think it all kind of comes together.
Yeah.
Omar, maybe just catch us up, man. What's the latest? How's the adoption been? How has the institutional relationships been? Catch us up.
Yeah, no, adoption's been great. A lot of interesting conversations. I would say in the last 6 months alone, the industry, at least on this side of the house, has been, it's gone from 0 to 100 miles per hour very, very quickly. Everyone's trying to figure out, okay, these are the core use cases we need to build out, whether it's collateral management, tokenized deposits, money movement. You're seeing tokenized equities starting to move on chain, settlements moving on chain, even the large exchanges are also starting to talk about, okay, how do I support 24/7 trading? And all of that, no, it's market demand. The use cases have been figured out, okay, these use cases make a lot of sense to move on to blockchain with 24/7 movement. And then the questions then become, okay, how do you do it, right? And so privacy is the first gating criteria, but it's not the only one. And so everyone talks about it quite a lot, because it's relatively new for, let's say, the blockchain industry and the crypto industry in general. So there's the privacy aspect, but then there's also, okay, how do I work with the privacy? Where does the privacy actually reside? Is it some sort of privacy pool? Do I control the data and I'm just hiding the data and I'm controlling the data and you're getting some sort of proof, which is kind of how Providiums work and our private interoperability works. But then there's all the other questions around the rest of the infrastructure stack too. Okay, you've got these private infrastructure. Can my same wallet infrastructure work? Can the same, Oracle data pricing infrastructure also work? How do I connect it to off-chain systems? So it's a much more mature conversation beyond just, hey, I just want to deploy a wallet. I want to deploy and get access to these types of assets. It's now much more sophisticated from, all right, the life cycle of a trade end to end. How does that work within the infrastructure stack? And how do I also make it work within my compliance paradigm, my risk accounting paradigm, and audit paradigm as well? So, but the conversation is very, very fruitful, very interesting. I think you'll see quite a lot coming out in the next couple months, particularly on the Providium side, especially with our private interoperability as well. It's going to be a very interesting time, I would say. Literally, institutions that I did not think were going to be moving fast on this type of thing. Everything from government-led institutions down to local regional banks, not just in the U.S. and Europe, but around the world.
Do they feel the heat? Do they feel like, okay, this is a regulatory regime that's actually pushing this and the adoption of this thing. SEC's got Project Crypto. We've got to be known as the crypto capital of the world. They see their competitors or their peers running a digital asset strategy. They feel like if they don't have a strategy or they don't implement something here, they're going to fall behind. Is that the general sentiment amongst these institutions?
Yeah, I would say, yeah. So the FOMO aspect is definitely very real. And it's coming at a time where the use cases have more or less been proven out. So you've got, on some side, you've got the market dynamics of, okay, stablecoins are coming. They're great product market fit. Tokenized deposits have been starting to move up as well. People are starting to figure that out. Now they're moving to more complex types of trades like settlement, equities, treasuries, etc. So it's a amalgamation of both the regulatory regime changing quite a bit and giving a lot more clarity on what can and can't be done. But then also there's the market dynamics as well, right? And you don't want to be left behind. So everyone does need to have an on-chain strategy. They need to figure out, okay, where do I position myself, my current business? How do I transform myself as well. And it's interesting because you've also got AI on the other side too. So there's a lot of different things people have to very quickly figure out, because the future of business is not going to look very similar to what it has been over the last 5 years from now. Is going to look very different from what it was 5 years ago.
Yeah. I'm curious on the Providian side, Omar, what has been the kind of response from these firms that you're speaking to about kind of launching their own Providium? Do they understand the nuts and bolts? Do they need to? Is it compelling to what they want to do? Are you seeing any special customizations or requirements? So generally on the Providium side, what's been the kind of feedback loop that you've experienced?
Yeah, I would say it resonates very well. The main thing is it's not so much of an individual institution launching their own Providium. It's more about what can I do with my counterparties? What can I do within my network? Which means that it goes beyond just a single Providium chain itself, which an institution would be able to run, have fully private control, have full privacy, full control over everything to do within it. But beyond that, it's okay, how do I properly interact with my banks that are within my network? How do I interact with stablecoins? How do I do money movement? How do I interact with all the different types of tokenizations that's happening? So the conversations have moved quite significantly from individual Providiums to now being more of, I would say, network discussions. It's like, okay, I am a bank. I want to interact with this other bank to try and figure out, okay, can we do cross-border 24/7 much faster, much cheaper? Okay, now I also need some way to actually move my tokenized deposit with their tokenized deposits. Now, okay, now I potentially need also a clearing solution in the middle. So it's now turning more into just pure infrastructure and now a lot more into coordination, I would say, as well, which is very interesting. And I think it's a very good sign overall for the industry as well.
Yep.
Because it's instead of just like banks or institutions or any enterprise just doing point solutions that are just relevant to them, the bigger piece of the puzzle is, okay, how do I build this network and how do I interact with everyone? How do I actually move assets and money around? Because finance in general doesn't work if it's just one company.
Yeah, naturally. Like these things are constantly lending to one another, borrowing from one another. And this has been one of the hardest circles to square. It's been the balance or the harmony between privacy, and we are here on Privacy Day, privacy and composability. Because fundamentally, privacy means that I'm not sharing all of my data with you, and maybe there are aspects of a transaction or an asset or a chain or a smart contract that are withheld from who we're transacting with. But we still need to maintain the composability with that person because, like you said, this entire financial thing doesn't work in a vacuum. So how has zkSync been able to harmonize between privacy and composability? Like we've heard, responses all across the docket from, technical things like we have a token standard that maintains some privacy, but, we have a smart contract check that makes sure that, someone can own this particular asset, they meet all the requirements. How have you seen some of these institutions kind of pull the levers or tweak these Providiums such that it makes sense, it's compliant and everything, but it maintains the composability broadly across the ecosystem?
Yes, that's a good question. So I would split that onto two layers really, right? One is the composability on the infrastructure side. And what does that mean? That means, okay, I have my own privacy layer, which could be Providium. My counterparty has their own privacy layer, which is their own Providium. They fully control everything that goes on side. Now, how do I, from a technology or infrastructure standpoint, how do I do interoperability with that other chain? But how do I do interoperability while maintaining atomicity, right? So either a transaction happens or it doesn't happen, right? So I can't essentially send you something and then wait for you and then trust that you will send it. I need to make sure that if I send it, you also send it, otherwise transaction doesn't happen, right? So that's a pretty big counterparty risk side of things. So we are solving that with our own private atomic interoperability between Providiums. So that kind of solves it from a technology standpoint, right? The next layer, which is also just as critical, maybe even if not just as critical, is the composability of the actual assets themselves. Because now we're talking about things that are on different banks' balance sheets or different custodians' assets. For example, a good example might just be two banks that each have their own tokenized deposits. They want to transact with each other. Okay, from a technology standpoint, we can make that happen. You have your own Prividium, your counterparty bank has their own Prividium, you have the token, they have a token. We can make that be in a fully atomic transaction, so you only send it if they also send it, and that could be a protocol level guarantee as well. The next question is, okay, well, I can't necessarily receive their tokenized deposit because that's their liability. I'm assuming their liability, and they can't receive mine. So now we need to talk about composability between these assets themselves. And this is kind of where I think a lot of the question marks are coming on. Do you still maintain and have things like, we have clearinghouses for these types of things, where banks essentially are sending money to each other for wholesale payments. Or another interesting thought is, what if you had like a settlement token that everyone kind of agreed to? And this is potentially an interesting area where stable coins can also come in to play, where effectively the money in, money out is a stable coin or some sort of settlement token that everyone agrees on and is a neutral party. And that could be the money at movement, and then the tokenized deposit or other things could be money at rest within each Prividium. So when you talk about composability, we have to think about how do you actually convert these assets to the other while not taking on someone's counterparty risk, right? So it's pretty much kind of the same thing as in DeFi as well, right? But we just don't, because in DeFi everything's a bearer asset, so it's a little bit different.
Just kind of closing out, it's been a long privacy day. We're just thinking about tokenized funds and this kind of rise of tokenization and how this wave continues to happen. We just talked about interoperability, privacy being kind of two sides to a different kind of sword here. When we're thinking about this wave of tokenized assets coming on chain, how do you think about capturing an outsized share of that value when it comes on chain? There's going to be everything from non-speculative assets like stablecoins all the way to, the furthest thing down the risk curve. You could call it equities, private credit, whatever it is. What is the zkSync vision for capturing a ton of that tokenized asset market share, and what does that actually look like practically?
I would say it's building the protocol and the infrastructure that effectively removes a lot of the counterparty risk, removes a lot of the operational and reconciliation costs and risks. And that's kind of a big area. If you can remove that, then it enables a lot more seamless movement of assets between different partners. The other area as well is, there's a lot to be done in terms of connecting this to off-chain systems and doing the reconciliation that way, and the workflows and the templates of, okay, what should be the open standards for how you move these assets across? I think whoever can help create those open standards and build a network effect around those open standards is where a lot of network effects can be built out. And that's kind of, so there's the Prividium itself, but then there's the network effects of, okay, here's open standards, everyone agrees to them, and everyone's willing to trade through these open standards because the benefits are huge, right? You're eliminating counterparty risk on these trades. You're taking out a lot of the reconciliation costs, a lot of the operational costs and burden. And that will create, I think, a significant multiplier on how money moves, how assets move.
Yeah, absolutely. Omar, thanks for joining us, man.
You must be busy in New York with all this. It's been an institutional bull run and token bear market, but man, things are happening.
Yeah, things are happening.
Yes. Absolutely.
Interesting time.
Yeah, Privacy Day is coming to a wrap, and we appreciate you joining and wrapping us here. Man, we've had all kinds of speakers from all across the docket, so appreciate you taking some time, spending some time talking about privacy. And privacy is the good work, so keep up the good work out there.
Go close some deals, Omar.
Appreciate you fighting a good fight, man.
Gonna put on my suit next after this call.
There we go.
75 and sunny out there. Get out there, huh?
All right. Have a good day.
All right,
Omar.
Cheers, man.
Thanks for having me.
Bye. Wow. Dude, Portugal, Congo tied 1-1. I knew it was going to be a tie. It was 8% on Kalshi. Would have been an insane hit. Would have been an insane
Warsh,
What a...
did this. This is what Warsh did to our portfolios. We are resorted to sports betting.
What a day.
Man, hell of a day. I feel like these guys are really...
What a privacy day.
You know, these guys, they're really... Look, privacy's hard work, but it's important work, man. It's important.
I agree.
Not everyone's going to do it. It would be easier to just take the money from the people that are going to buy the data. That would be
the money and run.
Take the money and run.
Guys, you know where we will be tomorrow here at the Empire State Building, live, building the future of finance, one day at a time, 12:30 p.m. Eastern tomorrow, same place, same time. If you guys are on YouTube, drop a W in the chat. We are having a fun time today, Privacy Day. Shout out to Zama. Let's give Zama some love. These guys powering our Privacy Day today. Ladies and gentlemen, we'll see you guys tomorrow. That ends our show from the Tokenization Tower. All my homies hate Kevin Warsh. And
a big shout out to Zama.
See you guys tomorrow.
Happy Privacy Day.